Good evening, everybody. It's 8:30. We're not late. Just saying.
Steven, I'm ready
Maddie.
for an interesting and great conversation today.
Same here. But before we get to that, thank you, everybody, for being here. Truly appreciate it. And we wouldn't be here if it wasn't for all of you. So thank you for showing up. Maddie, how was your day?
Day was great. I feel like I'm skipping. Am I skipping? Is my camera skipping? No?
I think you're okay.
Okay. It looked like it was skipping for a second. But let me just try to adjust it for a second.
While you adjust it, if everybody could please take a moment and read the disclaimer. We are not financial advisors. We are not your financial advisor. We just do a lot of research and make these videos for entertainment purposes and educational purposes only. Please keep that in mind. Do your own due diligence. And let's get on with the show. So, Matt, I have an announcement to make.
Another one. What makes us so lucky, Steve?
Amit will never be known as anything except for medium rare from here on out.
Really?
We get to the restaurant. I'm sitting there having a coffee. He comes in, sits down. He's like, let's order a medium rare steak. I say, you don't have to twist my arm.
Did you get the porterhouse, Steve?
Got the porterhouse for two. It was delicious, by the way.
There you go.
Delicious. I was very impressed.
What was your favorite part?
What do you mean?
Was it the company? Was it
obviously the
porterhouse?
Company. I think the people next to us thought that Amit and I were out of our minds with the conversation we were having, but
give us a sneak preview.
No, I mean, obviously, Amit and I were just talking about stocks and all that stuff. So the people next to us probably thought we were out of our minds, but it was great. So I got a shrimp cocktail for myself to start. He didn't want any appetizers. I don't know why. We got a really big porterhouse for two, medium rare. He got lobster mac and cheese as a side.
Good man.
I got the garlic mash.
From a kid from Jersey City. He's stepping up his taste a little bit. That inflation creep is coming in there.
Got the garlic mashed, and then he did get the chocolate mousse cake for dessert.
Ooh. I always have a second or third stomach for dessert. I'm not gonna lie to you.
Listen, the dessert belly is much different than the dinner lunch belly. Two separate sides of the stomach. But I had to go back to the office, so I did not partake in dessert. I did have a cappuccino afterwards, and it was amazing. Now, I get the last thing I got to get him on is sparkling water.
Good time.
I should have known he's a still guy, so we did have a bottle brought out. But that's the last thing we need to get him on.
It took me a while to get on the sparkling water train, and now that I've had it, I like it. Sometimes you just need a good sparkling water.
So what I tell them is when they ask, I say, surprise me.
What, between still and sparkling?
Yeah, surprise me.
I like it.
I like it too. So yes, it was very good. When you're in New York, we have to go to Benjamin's. It was incredible. And I thought that I was taking him to the one that I previously went to. There are two Benjamins within two or three blocks of each other. And we ended up going to the other one that I have not gone to before. And it was amazing.
They're 2 to 3 blocks from each other? What is one in Times Square? Or?
No, the one we went to was on 41st and Park. And there's another one 2 or 3 blocks away. They took over some other restaurant and built it out to a second location.
There you go.
Yeah.
That's why they call it Steve's. When are we opening up a steakhouse called Steve's?
I mean, Steve and Matt's. I don't know. I don't really want to be in the restaurant business.
And at that point, it's just going to be our live streams just constantly playing so that we can get ad revenue.
Ooh, we could write porterhouses off.
Steve, I mean, right off today's dinner, right? I mean, or today's lunch. You guys probably talked about stocks and YouTube and all that. So why wouldn't you?
So it was really good. Enjoyed hanging out. I always enjoy hanging out with him. So he will always be known as medium rare. I mean, look, when we went out with Vlad and Derek, the steak that they brought out, I mean, they brought 4 or 5 porterhouses out, and I got to tell, I think there was 10 people there, 12 people there, and I got to tell you, these things that they brought out were not medium rare. They were below medium rare, and Amit ate it. So I'm telling you, I've now seen him eat medium rare 3 times.
Our boys growing up. What are we
It's
gonna
amazing. It's amazing. Yeah, so this is not a different room, everybody. I just don't have the monitor tilted nearly as much. The story behind that is we got a different couch in the other room, and I got rid of the couch that used to be there and put the other couch there. And previously, I had stuff stacked up on it, so I would angle the camera away from it. So you're just not seeing the window that's always there.
There you go. That's what I'm used to seeing.
So it's the
Steve.
same room. Gotta make sure Grogu's in the shot.
I
All right,
I gotta make sure the lights are on today because people were roasting me last time we were chatting on. Was that on Sunday? Was that yesterday? Was that 2
I mean,
days
it
ago?
was looking like you were in a spooky room.
I got the lights on today because at this point I started in the dark, so I made sure that the lighting was appropriate for today's chat. But I'm ready to get into it, Steve. Like this, I think I'm gonna get fired up. I feel like it's a topic you're fired up about.
Yeah, I'm fired. I'm fired up about it.
I wrote on X, and I'm curious to hear your thoughts. I told people,
bring it up, share the screen, let's read it together.
Let's read it together, Steve. First and foremost, I apologize if anyone hates my political posts, but it is what it is. They're getting worse in my old age, but here is, and I hope people follow this. Let me turn it off. I don't need any audio, but we have a tough talk for you guys. Some of you guys are not going to like what we talk about today. I think some of it might hit home. There's going to be some emotions. And this was serious. Bring a pen and paper. I think we're going to talk about some things that hopefully, if you write, my goal for everybody in this conversation, the thousands of people in this conversation that eventually listen on my channel and Steve's, if you write one thing down, I've made my goal for the day. So my goal for today is you write something down on a piece of pen and paper that you're like, holy shit, that's really smart. And you have a guy who is much more intelligent than me, which is Steve, talking about stuff that he knows. And I've been in this investing game for 12 to 13 years. So I by no means am an expert or an actual financial analyst or advisor, but just one person to another, if I could help you climb that learning curve just a little bit, that's my goal for today. So, Steve, I don't know if you have any thoughts about that. I don't know if you agree. Do you think people are going to hate what we talk about? They're going to like it? I don't know.
Well, I thought you wrote some like long drawn out post that you were going to read to us.
No, that's why they need to tune in right now.
All right. I'm ready.
Well, do you think that people are going to hate it? Do you think they're going to like it?
I think that they're going to like it, and we are going to talk about some stock stuff after, and this does pertain to stocks, but it's more mindset. I got to shut this window. It's too freaking loud. Hold on.
Steve's going AWOL. And I will try to take timestamps. We'll see. You know, I feel generous tonight. People keep bugging me in the chat about taking timestamps, so let's see. I need to be better.
Something I got to get better about, too.
Yeah, I see people bugging Steve about it too. So let's see. This is 12/29/2026. Steve, I'll let you talk to people what you think.
All right.
What do you think is
we talk a lot about stocks, and a lot of people in the chat are invested in a lot of stuff that we're invested in. And before we get into all that, seriously, we're not smarter than the market and we're not smarter than anyone else. Do your own due diligence. Just because we think something is going to work, we get shit wrong also. Make sure you do your due diligence. But I think that we need to take a step back, get back to fundamentals, and not romanticize just trying to pick individual stocks and generating a large sum of money, which can mean different things to different people in a short period of time. Because the reality is it's not realistic. And I feel like there's too many people that are getting into the market because they want to try to live a fire lifestyle at the age of 26, which is
What do you
not
mean by
real.
fire, Steve?
Financial independence, retire early.
There you go.
What did you think I meant?
No, not everyone knows what fire means, so I just want to make sure anybody listening in after the fact. I'm sure one of the thousands of people watching this will not be like, "What does he mean fire? Does he mean like Instagram, like the fire Lambos and yachts, or what does he mean by fire?" Like, so
Yeah, no, I'm not talking about Lambos. I'm not talking about Ferraris. The reality is that a lot of people have gotten tremendous gains from companies like Robinhood, SoFi, Palantir, Rocket Lab, and I'm not going to disrespect it today. I'll call it by its real name,
thank you.
NVIDIA. The reality is that we've been in a stock market that is unique. And maybe we find some more 5 or 10 Xers along the way over the next couple of years. But the reality is that long and steady wins the race, and we need to do a better job at financial literacy and making sure that the younger generation has a proper financial education to make sure that they don't make mistakes that we've probably made, or at least try to give them the information so they're armed with it so they have less of a chance at making those mistakes and putting away for their future. Because I think it's becoming a lot less advantageous and a lot less glamorous to get a 12% return every year or a 10% return every year. And I think everybody's looking for 50% or 100%, and it's not realistic.
No, I think that's 100% true. I think people neglect to share the light on years like 2022, and they only share, oh, well, over the past however many years, I've been able to return X, Y, and Z, and not necessarily be able to shine a light on the bad times. And with those bad times, you really start to average out some of these good years. Like, I don't think people fully recognize a 20% down year can mean that you need to get 35% in terms of returns to be able to break even. And I don't think that people fully recognize that. So it's more realistic over the long term, 5, 10 years from now, that you're going to have a bad year that's going to erase a lot of progress. And how you take that in stride and how you get back up again is really important, because I saw a lot of people leave the market in 2022 and not show back up until the second half of 2024, and they missed a lot of gains because of that. And some of them were able to luck out, some of them were able to find the right stocks at the right time, but it's not necessarily about putting in $1,000 once. And the way I like to think about it is a whole bunch of things, and it's, I talk about this a lot. You really have to start with the end in mind in terms of where you want to get to, because that helps frame the reason why you're doing all these things, right? And not to say that these things can't change over time as you get more mature in your portfolio, or you mature as a person, or your dynamics change as your life changes. But the thing that I notice a lot of people do is they almost have squirrel syndrome, which is like every time they see an acorn, they feel like they have to chase it. And with that, you have a lot of inefficiencies. I've also heard of people referring it to as the soap. Like, the more you play with the soap, the less you have. Like, it just kind of disappears in your hands. And so I just want to make sure that people, get a little bit of a framework, like understanding where you're headed to and what you're doing on a monthly basis to add. And a prime example, I just got paid today, and a third of that paycheck I'm never actually going to see in my checking account. A large portion of it goes to a 401k. A large portion of it then goes to an individual brokerage account. A large portion of it also goes to Robinhood, and that's automatic. Like I pay myself first, just like I pay my bills, and I don't think that a lot of times people really think, and have it set up. And I'm not saying you have to sit there and budget to the last cent, but you really have to recognize, and if you're not in a situation where you are able to kind of focus on some of these things, you really need to get your money right, because money goes where attention goes. And if your attention is on the wrong things, we talked about this a little bit yesterday, your money's just going to disappear before your eyes and you're not even going to know where it went. And um, so yeah, that's kind of where I want to like start off with it. We can go into the 5 things that I like to look at, but I'll toss it back to Steve to see what other things he wants to add.
Yeah, there's a lot I want to add, and this is not the only time that we're going to talk about this. And I think that I'm going to try to talk Matt into making a series with me about this that's not alive, and we do multiple videos on multiple aspects, because this is a conversation that I think Matt and I could have for 3 to 5 hours, if not longer, with all the intricacies about it. What I'm actually going to run a poll. I'm going to bring up YouTube and run a poll in a minute. I'm actually just in StreamYard. One of the things I'm interested in is the age groups for people watching, because when you're in your 20s, I promise you, you think you have all the time in the world, and time goes slow. I know that when I was 18 to 22, maybe even 18 to 26, it felt like time stood still, even though I was doing so much, and it felt like I had all the time in the world. For the young adults out there, I promise you that will change. And I promise you, you do not have all the time in the world. And what you choose to do in your 20s has dramatic ramifications on your future. And parents try to tell you that sometimes they don't do it in the best way. And sometimes we all think that we know more than our parents. I mean, that's just the facts of life, that we can do it better, blah, blah, blah. Also, I think we need to do a really good job of showing everybody the reality of starting young, even if it's not a lot of money and it seems irrelevant, but what that can turn into, and gradually increasing it as you make more money, as you grow throughout your careers, or you pick up a side hustle, or you work a second job, or whatever it is. As you get older, most people will likely earn more money. And when you do that, instead of having lifestyle creep in, I would rather the opposite, and more money getting put away, because the power of compounding when you're in your 20s and 30s is so powerful. The last thing you want to do is be in a position when you are in your 40s or 50s and have to play catch up, because you are so far behind the 8 ball. And I promise you, if we have a market the way that we have had for the past 20 or 30 years, if you take one tranche of your money, and I'm sure people have heard me talk about this, that I have different sections for my money. I have my cash section, I have my S&P 500 section, I have my individual equity positions, and then I have my dividend stuff. What I do is proprietary to me. I'm not saying it is the best. I'm not saying it is the worst. I'm saying that it works for me. And I think everybody has to find what works for them. Matt and I have a similar stance on S&P and how our retirement money is set up. But that retirement money, in my eyes, is a hedge against myself, and a hedge to make sure that if I blow up my personal accounts in the short term or even in the long term, that when I retire, I am not going to have to worry about anything. And really getting everybody on that idea of putting money into an S&P or a total market fund. If you want to do some type of different fund, I know Chris likes the Contra fund, which is a very good fund, but a high quality mutual or ETF over the long term is a great tool to build wealth, and wealth is not built overnight. And look at this, medium rare is in the chat.
Mad
I'm
rare.
not sure. I'm not sure if Amit heard the beginning, but he will forever be known as medium rare, and he should just go ahead and change his name to medium rare.
He's spilling all your beans that you told him at lunch today, Steve.
I mean, it was a good lunch.
But no,
So, Matt, what
I
do you
hear
think
you,
about what I
right?
said?
No, I think it's brilliant, and I think I hear you, and I think a lot of people need to realize, like, how often are you going to be able to stumble upon a Palantir, Rocket Lab, etc., and be able to put enough money in within 18 to 24 months where you actually can retire, right? I think that the people that have been fortunate to retire, people that I know that have been able to fortunately retire off of these great movements already had a nice foundation that they had already invested, and they needed that little extra umph. So they're talking about shaving years off, but not shaving off an entire life cycle of investing in the markets, right? A lot of these people that I know were able to shave years off, but not completely get rid of this entire movement of being able to put money in over time. I'm investing now since when was it? Really like 2012, I guess, for like real 2013, maybe more seriously. And I've just now gotten to the place that I've gotten to. It took a long time, and I am a high income earner. Like, I don't want to be too specific about, financials or anything like that. But when it comes to that, like it took a lot of income savings for me to be able to get to a place where I am today. And it wasn't something that happened overnight. Um, and I think that that's something that I tried to justify or at least say in the beginning, which is a third of my money, if not more, is immediately going into investments that I've kind of set up. And I'm 100% with Steve. I kind of use my S&P 500 slash um, 401k as an oh shit fund, where it's like I'm constantly putting money in so that if everything else fails, I'm still able to kind of be there. And I've kind of set up where, to me, I make sure that I get a company match in there and taking advantage of a company match if I have one. To in the case of, let's just say, all else fails, I still have that opportunity to kind of lean on in the case of of bad events, and say some of these stocks actually go to zero, which I don't think will happen, but you never are too sure. But I look at it like that. Like, I look at building up different bricks of a foundation of my financial house. And you can't build a financial house or a portfolio in this case without having some sort of plan. That plan can change. The plan will change. You'll want to put, a dishwasher where you thought you wanted to put the stove, but it does it's at least something that you can put and hang your hat on to know, actually, that's not for me, or, oh, this guy wants to do like Steve all the time. He talks about how real estate and how I'm into that. Steve doesn't like the real estate thing. He's acknowledged that it's a blind spot, and he's okay with it being a blind spot in his portfolio because he likes the liquidity of the stock market, and that's something that people need to realize, right? Like, if you're getting involved in something like that, you need to recognize the pros, cons, how does it fit into your portfolio, and you either need to accept and digest it and be like okay with that, or if you don't, figure out maybe it is something you're into, but be honest with yourself. Just because somebody else is doing something doesn't mean you need to be doing something. Um, just because you see somebody wheeling stocks doesn't mean you need to be wheeling stocks. You need to understand why they're wheeling stocks, what's their perspective, what's their objectives, and really try to see things through their eyes as to why they're doing things, rather than, like I said earlier, being a squirrel and trying to chase after every acorn that you see. Just because you see somebody flashy, doesn't mean you need to go and do it. And there's going to be opportunities that arise themselves that you just need to recognize that's out of my comfort zone, or I don't want to put the due diligence into that, or I'm okay with missing out on that opportunity. um, I get shown people tell me to look at opportunities all the time, And I try to say, is this something I actually want to put effort into or not? It takes a lot of effort. And you also need to recognize, is putting effort into individual stocks is even something you want to do. That is, something that you can learn from today to be like, you know what? Maybe I don't actually want to put in all that time into stocks. It's something I learned very early on, which is I was investing in 30, 40 stocks at one point, 30, 40 different companies. And I was like, I can't keep up with all these quarterly reports to make an actual, physical effort to understand what's going on at each one of these companies where I can feel at least somewhat in control and have some sort of margin of safety and at least some sort of edge comparatively to others in the market. So I shouldn't invest in them. Maybe you do. Maybe you have a lot of free time. Maybe you don't work a 9 to 5. You can scan 30, 40 companies in a given quarter and truly understand them top to bottom, or maybe you can't at all. And that's maturity and understanding where you fit and what time commitment you can apply to these sorts of things. And if you can't apply a lot of time commitment, that's perfectly fine as well. There's instruments that you can use that are set up for you to take advantage of and not have to do that at all. So I just, there's always five things that I always look at, and time commitment in is one of them. And I think that that's something that people really need to recognize. I know a lot of people that just whimsically throw thousands of dollars into things and then are curious why the next day it goes down. And they just blindly followed somebody into it. And it's like, you don't know if that company fits in your portfolio or not. You're just blindly following people. You're on mute, sir.
I apologize. I'm going to end the poll here. We had 189 people answer it, so thank you very much. 20% were between 18 and 30. 32% were 31 to 40. 29% 41 to 50, and 19% 51 plus. So this is what I'm going to say. I love the fact that we have such a mixed demographic of people here. It's great. And there is so many different ways that we could go down. So that's why I say that I really want to get with Matt offline and streamline this and make separate videos about separate things. But just as a very high level overview, and this is just my opinion, you can find very smart people that will have a different take, and that take works for them. There's nothing wrong with that. You can find very successful people that have a different take that will tell you to consolidate into one idea, which has worked for them, or consolidate into two ideas. I get it. This is, once again, what has worked for me. And if I had to do something differently, and what I would tell my nephew, that's how I'm looking at this. And when you get, for even in the younger stage, when you get that first summer job, start making a mindset to put money away. Easier said than done, I know, especially when you move into 18 to 30. You're going to college, you have debt, don't have a lot of time to get a job, and you have a lot of expenses. I completely understand that. Matt said something that is so important, paying yourself first. I don't care if it's $5 out of your paycheck or $10 out of your paycheck. Just get in the idea of paying yourself first. The reality is that if you can sit down and write down for a full month how you spent money and how those places got you to spend money, and think about what's necessary and what's not necessary, because I promise you, it may not be fun becoming frugal to a degree. It may not be fun not going to the bar if you're younger, but I promise you, when you're older, that stuff's not going to matter. And when you get that first job, a lot of people love Dave Ramsey. I think he's a really smart guy, and I think that his advice helps so many people. But I disagree with some of the baby steps, and I disagree with 7. I think there should be more. One of the biggest things, in my opinion, is when you go to work and you enter into a career where you have a 401k plan or a 403b plan, and you are in a position where you're going to get a company match. invest up to the company match. If you even if you have to forego certain things that are entertainment. Now, when you're later on in life, that's different. But starting out, that is free money on the table because you're never going to get that back. And if you're lucky enough to get into a career 25, 26, 27 before you're 30 with a company match, you are so far ahead of the game because those younger years are going to allow you to compound that so much further over decades. You never get that time back. So starting earlier is the most important thing, in my opinion.
No, 100%. Um, yeah. So one of the things I want to give people is this thought around what this thought around wanting to moon, right, and wanting to get 100% rate of return. Well, 100% rate of return on $1,000 is going to increase it to $2,000, and it's really not going to make a big difference in what you're trying to do. And one of the key things that I try to tell people is I see so many people saying, "Matt, I have $1,000. How do I get to $1,000,000?" It's like, well, in that respect, you're 1,000 extra money, and you know how difficult it is, 1,000 extra money? Not 1,000%, 1,000x, right? You have to add 3 additional zeros to the portfolio. It's nearly impossible. But if over time you're able to scavenge away and get 1,000 or $100,000 into the portfolio, then you only need to 10x your money, right? It makes it much more simple. And so it's able to be done, piecemeal over the course of time rather than hyper focusing on one particular investment. And I try to tell this to people all the time, which is like, I think so many times people are trying to get and spend so much time doing an additional 1 or 2 percentage points return over the course of 10 years, where they could easily have done something like a side hustle for Uber or, roles or anything that can help generate money, an extra shift or something like that, to be able to attain slightly more money to put into the market, that's likely going to be and make a bigger difference than the extra 1 or 2 percentage points that you get on putting in that extra effort in the market. Now, I'm not saying don't put effort in the market, but I think doing those small things that you can add directly into the bank account and or say like cut some things out of your life that don't really mean a lot to you, then that's going to be a bigger benefit to your bank account and your net worth in the end of at the end of the day. And we talked about this yesterday as well, which is like, say you're going to axe throwing and jet ski lessons and golf and this and that. It's like, which ones are actually making you the most happy, and hyper focus on those and cut out the others, right? So if you sit there and come home and be like, I actually didn't really like that, I keep doing it, but I'm doing it anyway. Now, if there's an ulterior motive, like meeting up with friends and that things that actually make you happy, and that's just a byproduct, then take that into consideration. But if you're just doing things to do things, which I see a lot of people do, and it ends up in your garage and you have thousands of dollars worth of extra hobbies of things that are just in your garage that don't really actually mean anything to you, then you could easily cut some of those things out and add that to your portfolio. And the impact of that over the course of years will make such a difference that you have no idea. Luckily for me, it's easier said than done for most people, and especially for me because my biggest hobby is investing. But overall, and so I always try to hyper focus on how much I can add at the end of the month, but it gets addicting, But to me, that's more important, which is trying to get an additional 500, $1,000, or whatever into the account, because it's very unlikely that I'll be able over a 10-year time period double, triple, or quadruple what the market returns on any given year. And anybody that says that they can, 9 out of 10 of them are lying. Maybe 1 out of 10, if lucky, 1 out of 20 is actually telling you the truth, that they'll be able to outpace the market over a given a 10-year period. Um, so yeah, I think that that's something that people really need to focus on, which is it takes time. People are wondering, Matt, like, how did you? It's like I am saving 30% of my money over the course of 12 to 15 years is really where I've gotten to. It's not some magical investment in Rocket Lab, right? Like I had to invest six figures into Rocket Lab for it to grow into what it has today. For me, I had to almost do the same for Palantir. You know, I put close to like 60, $70,000 into Palantir for it to grow into what it has today. Um, I have, I think close to $1 million worth of the S&P 500 at this point, just because I know that that's a great place to store money. Um, Not because I'm trying to grow, like, it's so much simpler than I think people really understand. It's a two-sided equation. It's about expenses as well as how much you're putting away, as well as, the rate of return, right? There's really 3 things that you can kinda control or try to control to your best ability. One of which is rate of return, but not all of them are not all of that time is that really controllable per se. But you can control how much you're putting in. You can control the expenses piece. And so those are, focusing on things and attention on things that you can control. And I think sometimes, so many times, people focus on the rate of return piece, which isn't something they can control. And yes, they can try to squeak out an additional piece of performance, but sometimes it's better to hyper focus on the first part of the equation, which is making sure more money gets into the account.
So I'm going to end the latest poll I put out. It's actually pretty interesting. I asked, do you own ETFs or mutual funds? 141 votes, 69% yes, 31% no. So I'm going to go down a little bit of a path here. A very close friend of mine passed away over the summer, and one of the smartest people I've ever met in my life. And he never wanted to talk about finance or stocks with me because he said to me, I spent so much time when I was younger trying to beat the market. It wasn't worth the time. I put everything in ETFs and I lived my life. He did very well. Now, individual stocks aren't for everybody. And I am not opposed to them. Obviously, I'm in a lot of different individual stocks, but I have a bunch of money in the S&P. And I'm not saying what the perfect ratio is because I don't think there is a perfect ratio. But at the same time, I think that you need to map out where you want to get to in life and be realistic about it because accruing $10 million by the time you're 30 or 35 or even 40, 45, it's not going to happen for most people. It's just not. It's incredibly hard. Being able to live in a $2 or $3 million house and go on 3 vacations a year. And what people see on Instagram is not reality. And I feel like a lot of people are trying to chase something that's truly not attainable and they're driving themselves crazy and stressing themselves out over something that is just not realistic. And I think that we need to get out of this whole mentality of if you're not doing, before I say that, I'll never forget this. Our old CEO says to me one day, this was right after the pandemic when we had that massive year in 21. He said to me, it's crazy how people these days think that if you're not doing 50% or more a year, you suck at investing. And he couldn't understand it. And I think we're getting back to that place. And one of the things I have a big problem with is faking it until you make it, so to speak. And I think that there's a lot of people that don't necessarily sit down and think about how they're spending money. And there's a lot of slippage in the monthly bills that could be redirected into supporting their financial future. And I think that that's something that myself, I've had to do it. I think everybody's had to do it at some point and really look at it and make a real plan and figure out how they're going to get there. For me, it's always been about being able to retire and not worry about money. That's the end goal. And I think with most people, now, obviously, saving for a house, there's life events, you have student debt, there's all sorts of things. But the reality is, it takes a long time to amass a large amount of money. And we need to really start getting back to basics and think about what is maybe not, I don't want to use the word the safest, but the most consistent way to mitigate downside risk and to generate ongoing returns. And for me, that's the S&P 500, because no matter what, you're always going to be invested in the 500 largest companies in the US. There's always going to be new companies that enter, companies that leave. And the greatest thing about it is it's a quarterly rebalancing. So companies that fall out and don't meet the standards, they're no longer in there. New companies that are coming in, they come in. And you get a lot of the upside from companies like Nvidia because they grow into a company that hits the S&P and then they 20x. Now, you're not going to recognize all of that, but as it becomes a larger position in the S&P, your account's going to feel it. And it is a very easy, low cost alternative to trying to do it yourself. I'm not opposed to doing it yourself, but I do think it is very smart to at least go half and half, that if you're going to put X amount into individual stocks, put the same amount into an index fund or a total market fund or something like that. And maybe that doesn't work for everybody, but getting back to basics about setting yourself up for your future, creating a multi decade plan, and then taking a tranche of money to invest in individual stocks is a pretty good idea.
Yeah, no, I agree with you, and I'm seeing a lot of people talk about the psychology of money. That was actually a book that a buddy recommended to me. Um, Mr. Zach Baker. He's a guy that I met up with in Cancun when Tevis and Chris and I went down there, and it was nice to meet him finally in person. And him and I have been in touch a good bit as he travels and has done really well for himself as well. Um, that book pretty much is the epitome of, before I even read it, I just finished it a couple of months back, and that book is actually like the epitome of how I would describe a lot of the things that I like to describe with like the five key things that I look at for investing, which is objective, time horizon, risk tolerance, how active or passive you want to be in the stock, and um, how much contributions you're going to be adding. Because all those things, depending on how you kind of move them and adjust to them, will impact one another, and really help you understand. And psychology of money talks about how everyone's relationship with money is very different. People that grew up in the depression obviously are going to try to save money under their beds versus certain people in the early 2000s. Leverage was a big thing, adjustable rate mortgages were a big thing, so they did things differently compared to where they are today. And same thing with even now. Like, you need to continue to innovate. And that's part of the reason why the SP 500 is so brilliant, because you're able to continue to invest in the companies that are innovating and that are focusing on what comes next. But it talks about a lot of great things. You don't always have to invest in, say, the S&P. You don't always, I saw some people that are actually 55 plus on the stream, actually was like 20% of you. And I'm really glad that you're still sticking around and watching as well. Some of you guys might be retired at this point. You don't need to hyper focus on maybe the S&P. Maybe you need a little bit more with respect to just ensuring that 4% of that portfolio you're able to use for groceries and things next year. So you might have it in a high yield savings account, and hyper focus on making sure that you don't lose money comparatively to potentially trying to get a 10 or 20% rate of return. And so it's about knowing where you are in your life cycle, and it's about knowing where you need to get to be able to be called enough. And I think that that was a piece that was really well hit as well in the book, The Psychology of Money. It talked a little bit about a gentleman who was worth over $100 million, and he ended up getting caught, um, you know, played it very clean, was able to do really well, and was a really good businessman. But he ended up hearing some insider information and made stock trades off of it, and he ended up getting locked up for 10 to 15 years. It's like, well, why did you need to do that? Like, you were going to make maybe like half $1 million, and you already have $100 million. Like, why put at risk, some of those things to be able to get yourself just that little bit? Like, are you that greedy, where you need to make that trade? And maybe some of it's the thrill of the chase or what have you, but it just goes to show you that there's different lengths that you need to go to on every facet, right? Or do you want to be actively investing in terms of, can you day trade? If you're working 9 to 5, I'm just going to be out here and tell you straight up, you shouldn't be trying to day trade, right? Like, there's small things that you can do to save yourself the headache of making mistakes that can cost you years in terms of your financial future. Um, that hopefully, having conversations like this and actually sitting down and thinking through them with thought rather than being whimsical and chasing an acorn, um, will potentially save you years and get you further up the learning curve, and getting you closer to building your financial house. And so, yeah, I'm not exactly too sure if you want to climb down specific examples, or go
Yeah,
line by line on for the 5 things that I like. I don't know if you have, like, you talked about the baby steps with Dave Ramsey. Not sure if you have your remade steps or not, or if you just want me to kind of go down my 5 key things that I like.
I have an outline. I want to add something and get the calculator out, and then we'll go down your steps. Because
Yeah.
I really want people to see the examples, but a lot of people that are in the chat listen to Amit regularly, okay? And they've heard me say these
Who's
3
that?
words. Some guy who, eats medium rare steak now.
You mean medium rare?
I mean, medium rare.
Okay, got it.
And, he has an amazing show that he does twice a day. And a lot of people hear me on there. For new people, they think I may be joking. A lot of people that have listened to him for a long time know that I truly mean it when I say that I do not care. And I say it from a position of not caring because I've put myself in that position. And when the markets were going down in the spring, it felt like the sky was falling. And Amit would call me, medium rare would call me, and I would get on the stream in the afternoon driving through the city, and everybody would be freaking out. And I would say, I don't care because it doesn't impact my life. Because the money, the big thing that I believe, if you're going to invest in the market, you have to look at that money as gone. You cannot depend on that money. You have to be in a position where if that money goes down 20%, 30%, 40%, that you don't need that for anything in the short term. Like, you have to be in that position. If you can't afford to lose the money, you should not be investing it in the market. You should be putting it in other things. And if it's going to keep you up at night, being down those numbers, you need to rethink why you're investing or how you're investing. But when the market went down to 4,800 or 4,850, wherever it was
I wish.
extremely easy because I don't need to withdraw the money that I'm putting in the market to live off of. I don't need to run a wheel strategy to live off of. I don't need the dividends to live off of. You know what I mean? I work, my wife works, we do okay, and we have income coming in. But being in the position of I don't care truly means that you can ride it out. And when you look at just a traditional S&P over the past, say, 95 years or so, it's been up roughly 65 to 70% of the time. Now, this is a much different market than it used to be. So I'm not putting as much stock in what happened in the past because pre 90s, you did not have technology driving this market. Technology has driven the market, and it is not a market driven by manufacturing or anything else. But if we take that aside and just look at the data shows us that we have only had two periods in the past 4 decades where the market has been down for 2 consecutive years. You can count this right here as two periods because you have 2000, 2001, that can be counted as one period, and then 2001 to 2002. Now, you had several things happen then. You had the dot com blow up, and you had 9/11. We were in war. It was not good. I remember that period. It was horrible. And those things can happen. Besides that, you have to go back to 73, 74 to get two consecutive down years. Ultimately, GDP expands. And if you believe in the American economy, if you believe in the global economy, and you believe in productivity, then companies are going to expand their earnings. If I bring up a chart of the S&P's earnings over time, it has gone up and to the right. And when I look at this, I think, man, it's been a great time to be in the market. Even if you're younger and you started investing a decade ago into the market, you have a flat year down less than 1% in 2015. You have 9.5% up. You have 19.5% up, down 6.5 or 6.25. Then you have up almost 30%, up 16.25, up 20, almost 27%. And then you hit 2022 down 19.5%. And then almost 25, almost 20, or just over 23. And then this year, probably going to end out around 18. These are awesome gains. And being able to put into an S&P 500 index fund every paycheck, like Matt said, which some people is twice a month, depending on what the duration of your company payments are. But it does wonders over the long term. And before we get into Matt's 5 things, I want to get the investment calculator out and just run through several scenarios to show you how much money you could potentially get with just an average rate of return over time with different denominations going in every 2 weeks. Matt, when you see these gains, do these look exciting to you? Because they look exciting to me.
With the annual?
Yeah, just where
Fire
else,
me up.
where else are you going to put your money that has a track record of not really being down too much? And remember, when I say I don't care, it's because if we have a bad year, a bad 2 years, I don't need to pull that money out. And I can keep putting in, buy on a dollar cost average, acquire more of something I want to own more of at a lower price, get the dividends and reinvest them, get that company match, and let it compound. I mean, how do you feel about that, Matt?
No, I mean I wholly agree. Um I think it's been fortunate that we've been able to witness some of the best companies in the world really show up when, until more recently, international stocks really lagged. And now, this year, international stocks have done extremely well. But before then, it was really just the S&P really dragging things along, and more so the top 50 companies that are dragging things along with them. And so it's just been a beautiful sort of actively managed ETF, if that makes sense. I mean, not active in terms of like actual advisors managing it, but it is in to an extent that the Standard and Poor's committee does look after these companies that say, hey, which ones are increasing, which ones are decreasing in terms of value, and making sure that, if one of them gets hit by a black swan event, it immediately gets kicked out within a quarter. So you don't have to deal with the entire implosion of an entire company. It gets replaced, and companies that are lackluster or waning, they get removed. So it's awesome that we kind of have this ever built, or sorry, evergreen sort of economic machine that we can kind of trust and has really good. I mean, is it perfect? No, nothing is perfect, because there are companies in there that I would love to actually see in the S&P 500 that aren't, like Cheniere and several others. But they do a better job than anybody else in the world in terms of being able to get this together. And it just goes to show you that, at least for now, yes, there's problems with the US economy and potentially politics and corruption within here in the United States, but overall, it works way better than most places in the world. And we sometimes get in our way, but most of the time we get out of our way and allow companies to really develop and grow into great businesses. So I think it's awesome. There's also a lot of chat about dividends and buybacks, et cetera, being a large portion of returns. And yes, to an extent, but at the same time, you do have large amounts of innovation going on, like Tesla, like Rocket Lab, so many companies that have really bootstrapped their ways that have yet to really pay any real dividends, that have generated massive amounts of wealth. Think Amazon as well. I don't think Amazon really has done any buybacks as of yet, and I know for a fact they have not had any dividends. So you can find these great companies that that show up and really go a long way. But the thing that I'm most excited about, Steve, and it goes back to something they were talked about earlier with your calculator, is I would love to see what, because we all know that the majority of the time people do not meet the market returns, and some of that isn't necessary, right? You might be a 65-year-old individual who's really trying to preserve wealth, so maybe beating the market isn't your thing, or even matching the market is your thing. Maybe you're more so concerned about extreme diversification, 4 to 5% dividend yield, something like that. But I'd say the majority of people are trying to beat the market, or at least match the market, and most people cannot. And so I'm kind of curious, in your calculator, if increasing by 1 or 2 percentage points versus, say, being able to add an additional $200 to $300 a month is actually going to outpace. And because I think a lot of people spend a lot of time researching stocks. I do as well. It's my hobby. Um, but at the same time, I put all the money I make from YouTube, everything that I make from every other auxiliary piece of side hustle money, back into the stock market. Um, Really, I just use my individual salary to live off of. Um, so anyway, I'm kind of curious to see at what point does it kind of bend over? Is it like after 4, 5, 6, 7% of actual increases annually that you're better off, or is it something like only 1 or 2%? So
Yeah, I'm going to get it up in a sec. Once again, thank you everybody for being here. Really appreciate it. I'm seeing a lot of the regulars here. Really appreciate all the support. Rambler, Chels, Ray, Michelle, June. I mean, just seeing a lot of people here. We really appreciate everybody hanging out with us and listening to us. And this is why we do this, because we enjoy interacting with everybody. We're not really going down the question route right now. I have made a mental note of a lot of questions that have been asked that are great questions that I'm going to try to get to a little later. And so keep that in mind. We will circle back to some of these. Matt and I have been talking about wanting to do this for a while, and we're going to continue to do stuff like this because we go down the rabbit hole of individual stocks a lot. And I want, for me, I have a vendetta against the educational system. I hate it. And I'm not afraid to say that. I think that we really do a disservice to a lot of people. So I'm trying to figure out a way to help the younger generation. So I got to think more about this. But medium rare, you did not have to do that. This guy, thank you
oh,
very
mid
much.
rare, the myth, the legend.
Medium rare did not have to do that. Thank you very much. And Keith, Thank you very much. Appreciate it. JZ1, thank you very much. We are not starting a daycare center, sir or ma'am. Not happening. But
What about a Leering Center, Steve?
no, I don't want to get into any of this stuff.
Okay,
So
sorry.
let's really take a little bit of a step back and let's just think about this. You don't need to have a degree in economics. You don't need some fancy degree. You don't need to be an accountant. You don't need a degree in finance. You don't need a master's degree to take control of your future. You don't need any of that stuff. You just have to be sensible and realistic. It's just math and it's very simple math. And the one thing before we get into, I'm going to clear this out. The one thing that I want everybody to realize is we're sitting on the greatest era of investing, not because of where the markets are. Medium rare. I'm bringing up everything and saying thank you to everybody. Thank you very much, Adam. Really appreciate it. So, of course, medium rare threw me off. What the hell was I saying, Matt?
I don't know. I got distracted by medium rare as well. Look at him. He's just throwing us off.
Throwing us off. Well, oh, the whole thing about not needing a fancy education.
Yes.
We're in the greatest era of investing because of the tools that everybody has at their disposal. I remember the days when it cost $35 to make a purchase. There was no internet to make a purchase. There was no E-Trade or Schwab or Robinhood or Interactive Brokers. It was you call Quick and Riley or you call one of these places. Today, you can do everything from your phone. And there is so much research out there, for better or worse. And everybody has access to these tools. And at the very least, I'm going to link the calculator that I use because it's a very simple calculator. And please play with it and figure out where you want to be and figure out what you need to do to get there. So we're going to play with a couple of scenarios right now. So the first one that I want to show everybody is if you start with no money, okay, and you give it, if you're, let's just say you're 25, you get out of school, you went to college, and you now have 40 years until retirement. Retirement's 65. So you got 40 years, okay? If you get a market rate of 11%, and that's just under, right now it's about 11.6 average, and you do $100 a month. To some people, that's a lot. To some people, it's not. Especially when you're younger, that can be a lot of money. But if you were only to do $100 a month for 40 years, you would end up with $732,000 off of 48,000 of contributions. So let's think about this. The first 5 years of investing, let's say you're going to grad school, you're working 2 jobs, whatever it is, whatever your scenario is. And for the first 5 years, okay, you're only able to put in $100. After 5 years, you will have $7,843.05. So let's put that in as your new starting amount, okay? So we're going to start off with that. And now, for the next 10 years, you're able to kick this up to $500.
Oh, big money, Steven.
Okay? So now you have 127,000.
I love that.
All right? And we've burned 15 years.
But hold on, this is a really important chart on the bottom, right?
It is.
So like even at 11%, like this is what I'm trying to tell people. Imagine you had just started off without any additional contributions, how small that amount would be. But yet look at the contributions piece, right? Like you can control the contributions piece to the majority of it, right? Like I know so many people that just say, "Oh, look how much money I have left in my checking account. Let me just go spend it." but a lot of that is really just coming from contributions. So I just try to iterate to people that consistent contributions are extremely important.
So let's say, so we're at 15 years now, okay? Let's say you're 40 right now because we started at 25. We did 5 years, then 10 years, okay? So we got 25 years left before retirement. Let's say for the next 5 years, you're able to kick this up to 1,000, okay?
Hit me, Steve.
Now you're at 293, 384,071. And let's say now you're in a position where you can max out based on the current numbers for the rest. So we got 20 years left. Okay. Now we're able to put 2,000 a month in. You're going to end up with $3.98 million when you're 65, based off of these numbers. So it is possible to start with $100 or $50 or whatever it is. And then as you have more earnings power, as long as you're not letting lifestyle creep get the better of you and you plan for your future, I just created a scenario where we went from 100 to 500 to 1,000 to 2,000 in the calculator, which could be realistic for some. It may not be realistic for other. That's why I linked the calculator, but you can create a scenario and learn what you need to do in order to get to the number that you need. And when you get to a number like this, okay, you may decide, you know what? Once I hit a certain number, I'm not putting anything else in. Let's say you're 30, okay? Let's say you start with 0, but by 30, you're in a position where for 10 years, you can put $2,000 a month in. Now you got $421,180.66. And now you say, I'm going to turn it off. No more contributions. You're 40 years old. You sacrificed for 10 years to get to that point. You got 25 years left. You go from 30 to 40 to get there. What do you think this number is going to be, Matt, when I hit calculate?
2.5.
5.7.
Wrong again for me, Steve.
I'm just saying that so many people are focused on individual stocks, and I don't think that we do a good enough job really grinding it in that there is a whole other side to investing, and thinking about retirement is a great thing in addition to playing the individual markets and having this as a backup fund. I mean, look, if you're lucky enough to be in a position where you can get to 421 after on a starting amount and still put in another $2,000 for 25 years each month, that goes up to 8.6.
Not enough, Steve.
It can become huge money. And I don't think people play enough with these calculators.
Why am I
I
still?
mean, if you start at 0 and you put 2,000 each month in for 35 years, and look, that would mean from 30 to 65, you would need to put it in. You get roughly 8.6. Now, maybe you want to retire early. Maybe you don't need 35 years. Maybe you need 26 years. And you start at 0. You can still have over $3 million. And think about what Matt said. Look at the amount of interest that accrues. And the biggest thing on $3 million, look at what the annualized interest is. You start thinking about, okay, 318,000. And we all know the market is not linear. It doesn't go up like this, but the up years account for the down years and balance everything out. You'll still be able to pull out 150, 200 grand and still grow the account. So at what point do you need to not worry anymore? So I think that we really need to think about, you know what? At $3 million, I can live a pretty damn good life in retirement on just what's being made on an annual basis without necessarily pulling down on the principal.
Mhm. And I think
So,
a lot of people are. I'm actually seeing some surprising comments like 11% is not guaranteed. Well, I see people all the time being like, you can guarantee 15%, you can guarantee 20, you can guarantee 25, just based off the most recent couple of years that we've been able to see. And I'm actually pleased to see somebody say that 11% is not realistic. Like I'm actually surprised that people are legitimately in the chat piping up and being
okay,
like,
so let's do this.
actually being something realistic for once versus so many times I've seen
Okay?
people be like, you can get 30% a year guaranteed. And it's like, come on, guys.
How about
So,
7%?
oh, I would love 7%.
How about 7%? 1.7 million.
And that you said something beautiful there, Steve, which is like, yeah, stop the, well, I guess you don't, yeah, once you're at 1.7, just do 1.7 out in time. Um, and so starting amount of 1.7. And I would love to show people at 7% interest, like, uh, what they'd be able to potentially get to. And this is kind of what I'm showing. Is just like
For
once you
how
kind of
many
get to,
years?
it doesn't matter. What's more important is to show the people like what interest you're getting, and then if you just remove the
Oh, you're
contributions.
getting 110 grand on one
Well,
on
I guess
some.
yeah, that's I guess what you, yeah. So you're getting like over 100 grand. It's like that's that's wild, right? In terms of return. So if you think about it, you'd be able to pull out, 50, 60, 70,000 coupled with Social Security if you think Social Security is going to be there, or if you have a pension or something like that. Say you're a teacher and you have that ability to get something, then you know you you can easily start at the end. Like I was talking to somebody the other day, and they're like, "We need 150." I'm like, "Okay, 150, that's awesome." I'm like, "Well, what do you think you're going to get from Social Security?" They're like, "Well, we think we're going to get 2,500 from between me and him." I'm like, "Okay, so 5 grand, so that's 70 grand." So I'm like, "You need 70 grand a year that you are missing right now." And they're like, "Huh, that's a lot less than I was thinking." And I was like, "Yeah." And I was like, "And if you use the rule of 3.5% or 4%, depending on how aggressive you want to be," I'm like, "You really don't need that much money additional compared to what you think you're going to get from Social Security." And so this is what I mean by starting with the end in mind to understand where you need to get to. Like if you're just sitting there thinking, "Hey, I just need 70 grand a year," then you could start to say, "Okay, well, if I'm even super conservative on my return, say 5%, 6%, 7%, and you're able to get a little bit of covered call income, you're able to do some work on the weekends to keep you kind of out of the house, you can do a lot better than you think you can." And I think so many people think you need, 20, 30, 40 million dollars. I should probably listen to my own advice, but some people think you need that much. And it's like, well, what are you actually trying to chase? Like, are you trying to chase Lambos and $10 million houses in Montana, or are you just trying to live? And make sure that you can be on your phone all the time, and watch stuff on Instagram, and once or twice a year take a vacation. So
Spencer, thank you very much. Really appreciate it. And look, I get it, everyone. Get returns are not guaranteed. Everybody knows that. These are the raw numbers, okay? Since 1957, okay, the average annual rate of return is 10.56% for the S&P 500. That is a very long track record for returns. And if we look at a shorter term basis, over the past 20 years, which includes the financial crisis and every other bad thing that has happened, we are at a 9.05% compound annual growth rate. Over the past decade, we are at a 12.89% compound annual growth rate. Over the past 5 years, which includes 2022, Liberation Day, 13.77%. So gains are not guaranteed, but we are just not in an environment where 7% is the norm. It isn't. Going back to 57. And I don't know where we're going to be in the future, but there is a decent chance that we are going to stay at 10% or above over a long duration. So you can build a more conservative model and use 5% or 6%. That's fine. I am going by where the numbers are showing us we are at now. And I'm actually under where we are over the past decade. And myself, I believe that we will replicate or do better. But instead of using 12.89%, which is the growth rate over the past decade, I'm using 11% because it's a little bit higher than where we are since 57, but not even 1% higher. So just keep that in mind about what the actual returns from the S&P are.
Can you do one more test for
course.
me? I wanted to check if you start, let's just say, at $1,000, not even, let's just say starting at zero, and let's just say you add, let's just say $100 at 7% for 30 years.
100 per month?
Yeah, 100 a month. So just go with that. So it's 116. So what is it if you do an 8% rate of return? So it's 117 at 8%. It's 140. Very good. So remove the 8%, make it back 7%, and then make the additional contributions $200 instead of 100. And that's what I mean, people. Like that's what I'm trying to get after, which is that people need to recognize that. And I'm curious now to get to, let's just call this 234. Go back to additional contributions being 100 for 30 years. And I'm curious how much you need to beat the market just instead of to be able to get you an additional. So make the additional contributions $100 again. I'll remember 234,000. So make the return rate 9% instead of 8%.
You're good?
Yep. You still underperform. What about making it 10%?
You're getting closer.
Still underperform. What about 11%?
You're just over.
So you need to get an additional 4%. This is something that's important for people to. You need additional 4% return, right? Which is difficult. Imagine trying to beat the market by 4% over the course of 30 years. That's very difficult to do, right? Just instead, you could just add an additional $100 a month and be able to get about the same amount of money. Like, think about that for a second. Like, I think that is extremely important for people to recognize. It's like, you could try your best to try to hyper focus on something that you may or may not be able to control. But I guarantee some of you guys can find $100 under a mattress somewhere and be able to put it into the market every month. And if not, pick up an extra shift or do some side hustling or whatever. Like, to me, sometimes I think so many people can hyper focus on trying to outpace the market when they really just need to get their fucking money up and realize that, you know, you can be better about adding more money to the market and you'll get way further that way, something that you can guarantee. And instead of buying extra this, extra that you don't even care about, and you're just trying to keep up with the Joneses, if you just save that extra $100, then you'll be in a much better place than trying to outpace the market. And you can just say, okay, instead of me spending all this time, you know, and granted, take this with a grain of salt, because I love looking at the markets just like everybody else. But this goes to show you, it's just like, this is why Steve puts his money in the S&P. This is why I put my money in the S&P. It's an oh shit fund that it's like, if all else fails, then, you know, it'll get solved. But over the course of 30 years, like, if you just put it in the S&P and just let it do its thing, and you add an additional 100, 200, $300 a month, you're going to be way better off than I would say most people trying to day trade and learn this and learn that. And unless you really get good at it, like unless you spend years, 5, 10 years to really hyper focus on what's my niche and really seeing where you have an edge, it's likely going to be a losing venture for you. And it better more times than not would have been best to put your money into just the S&P 500 and hyper focus on doing some side hustles on the weekends. So, and I try to iterate that to people, and I found that out very early. Like I was able to stumble into small venture, which was able to get me like a couple $100 every time I did it. And it required a lot of niche like work and things like that. But I was like, shit, like why focus on that? Or sorry, why focus on like trying to get, an additional 1 or 2 percentage points or whatever on my portfolio if I could just spend an hour doing that and add $300 to the portfolio. Like I would do that infinitely over trying to get an additional 1 or 2% above the market returns, because this I can control, the other thing I cannot. And so, maybe you have a niche, maybe you have something that you can knowingly outpace the market by a couple percentage points, then all power to you. But I would say the average individual listening to this, of thousands of people that will listen to this, it's likely better for you to just add an additional $100 to the market every month than it is for you to try to hyper focus and find stocks that potentially, maybe not even guaranteed, but potentially might outpace the market over 10 years.
So I'm going to give everybody a money hack. And this is going to sound weird potentially, but it's not. Find a great spouse that has similar or the same goals, and you're both on the same page with your retirement future.
Find you a baddie like Steve.
And that's really an amazing way to double so many things. I mean, if you think about it like this. Hold on. Let me zero this out. So let's say you get married at, I don't know, 30. And over the next 15 years, okay, combined, you're able to save 400,000 in retirement accounts. And then you're in a position where between the two of you, you can save $3,000 a month in there. Okay. And at 45, you got 20 years to retirement. You're retiring over $5 million at an 11% rate. And if you want to be more conservative and say 9%, over 4 million. So I just think that people need to really think about it. And look, for some people saying that this isn't realistic, to some it is, to some it isn't. I mean, it all depends. This is realistic to some, it may not be realistic to other. If you can get to just 100,000 between the two of you and put 1,500 in, the 100,000 by the age of 45, and then being able to put in 1,500 a month for the next 20 years, you're still retiring at 1.5. So you just got to play with it and figure it out. But investing is not just about individual stocks. And we really do romanticize individual stocks because that's really all we talk about. But the S&P is a great tool for long-term wealth and setting yourself up for your future. And the reality is that it is very hard to become a multimillionaire when you're young. It's just incredibly hard. And the deck is stacked against you because when you do not have a high income or a lot of money, all those expenses eat away at what you are able to put into your investments. But when you're making more money later on in life, you're able to not only comfortably live, but invest. So I think that we need to just take a step back, and hopefully everybody takes away from this at least making a long-term plan for themselves. That's it.
Can we do one last one? I'm not sure if you wanted any
Sure.
other.
Yeah.
So the big thing this year, at least I think, is one of the best things that have come out of the United States over the past 10 or so years that the government's been able to provide us are these Trump accounts.
Yeah.
And so, kids that are being born between January 2025 and I think it's December 2028 will start off with $1,000, and then you'll be able to add up to $5,000 a year in contributions. That'll eventually, when the child turns 18, they'll be able to um, convert it to an IRA. So I'm just kind of curious, right? Let's just do
If
a
they
thousand
never add
dollars.
if they never add anything else in their life, they'll have 883,000 at 11% off that $1,000 investment.
But what if you do a $400 a month, which gets you roughly to 5,000 um, a year from family members, whatever. Somehow
For
you're
how
able to
long?
get for 18 years. So for all 18 years, you're able to add the 5,000 a month to those accounts. I'm curious how well these kids will be set up.
I mean, 5,000 a year.
Yeah, 5,000 a year.
Yeah.
That's what I meant. Yep.
So you get to 260 by the time they're 18.
Phenomenal.
It's
And then
phenomenal.
let's just say 260, right? And then you don't add it ever again. So you go from what, 18, 65 minus 18. I'm not good with math. So additional 47 years. Let's just say they go to 65. So for 47 years at 260 at a whatever it is, no additional contributions. How fucking crazy is that?
It's insane. Is what I'm double checking to make sure that this is actually settings are correct, but it's right.
47 years, 11%.
It's insane.
I mean, even if you were to say do 7% versus 11, I mean, you're still gonna end up in tens millions, yeah, something 6 million.
Hey, that 4% is so huge over that long duration. If you go from 7 to 8, you're going from 6.2 to 9.7.
Well, that's what I'm saying, folks. Like, you have the potential for anybody that's having kids right now to really, and people are saying, oh, 47 years is a long time. I agree with you. But you think about it, even if you were to borrow against that or pull out your 2 to 3% or 4% to live a year, you're talking about being able to retire in your 50s potentially, setting up your kid to be able to retire at that point. And the market will be able to.
Forget about 47 years being a long time. Everybody's going to live to 65. Hopefully. You know what I mean? Hopefully, with modern medicine and everything, like living to 65 is becoming more normalized. It feels like when you're 20, 65 is light years away. It creeps up on you. And having that you can just not do anything with is amazing. I can tell you that I've been investing for my nephew. He's 9, been investing for him for quite some time. And he has no idea. And I am looking forward to when he turns 18 and he sees that account. I can't wait. I can't wait to see his face and explain to him what that money is for. Because I want to make sure that he is set up with a life that I was not set up with at that age, and make sure that when he is 60 or 65, that he's in a much different situation than most people. Part of the reason also is, if he wants to start a business when he's in his 20s, I want him to be able to have that money to start a business with. Or if he wants to go away to college, I want him to be able to buy a house, put a down payment on it, find 4 people to live with, rent it out to them. And I want him to be in a different position than I was in. That's all.
Hot Steve, man. High flyer. High flyer. But yes, I mean, if you want, we can transition over to potentially some stocks.
Yeah, let's you and me. We should make a video separately about the 5 things that you look at. We should combine and redo baby steps and make dedicated videos on that stuff. Let's transition into individual stocks and stuff like that.
Let's do it.
So, well, all right, real quick, before we do, I do want to answer just a couple of quick questions that I do remember with my mental notes. Somebody asked about, is SCHD or JEPQ a alternative for an S&P 500 index fund? If you're asking me, my answer is no, it is not. Now, you can play the game of modeling out based on the dividend growth rate of SCHD where it would produce in 30 years. But to me, that is not a substitute. That was probably the big one that I wanted to just address. That needs to be a different tranche of money. Matt, were there any that you wanted to address before we go to stocks?
Sorry, but I got lost. I got a message. What was it?
Is there anything that you
SCHD
want to
versus
address?
JEPQ or
No, just anything you wanted to address from the
chat?
whatchamacallit, from the chat before we transition to stocks?
I think I addressed a few of them during. So I think I'm okay.
Okay.
If I see anything else, I generally I'm pretty decent about reading it while we go along.
Yeah, I just think, look, when you're in a different position, and if this was me telling my nephew what to do, I would say to him, my advice would be get to a point where you can max out your 401 in an S&P index fund. And then if you really want to do the research and you can tolerate the risk, investing in individual stocks can be a great tool. But you have to be willing to put in the work. And I would not recommend sacrificing investing in an index fund for that. Even though you can make so much more money doing it, the odds are stacked against you in the individual market. In an index fund, you get to own all the great companies. So doing both is great, but just make sure you're not sacrificing your future self for it.
Yeah, I mean, Steve, I think you hit it on the head. You got to be like Rihanna. You got to work.
Love that. All right, Matt. Let's transition. What are we investing in to make some money besides S&P?
I'm actually
And
curious. Do you have a MITS post from earlier?
I do not. And are we
Okay.
going to enter the Thunderdome tonight?
I hope so. But let me pull up MITS.
Ooh, the Thunderdome. We may be entering the Thunderdome later, ladies and gentlemen.
Let me pull up a MITS post earlier, which I thought was really good. I'll share. Whoops. So I don't know who this Mick guy is. So I think he goes by medium rare these days. But I just shared it, Steve. So he posted the top Wall Street picks for 2026. So I thought that this was pretty interesting. Morgan Stanley hyper focusing on Amazon, Nvidia, ALAB, which I don't even know, the Nasdaq. I'm assuming APPN is AppLovin, and then Frog, which I'm not sure. Who's ALAB and Frog, Steve? You're on mute, amateur hour.
Yeah, I'm trying to see what time the Thunderdome is open until.
Oh, okay.
So Matt, 2026 is almost here. The investment houses are saying that we are going to have a good year next year with their predictions. We're seeing Wall Street's top picks here. If you had to go into some of these, what would you, let me ask you this, are you buying any of these? Because I know at least one that you are actively buying, but are you buying any?
The White House quant did respond to this. These are the ones that I'm going with for 2026, Steve.
So Matt, can you go back to the top, please? So it's interesting to see these names because I believe 2026 can be a year of a everything rally led by big tech. But there's one company here that I really think is going to have a stellar year. Maybe two companies that are going to have a stellar year. Can you guess what they are?
Are they any of these? This is once again from a gentleman called Medium Rare.
Uh, Negative, sir. They're not on medium rares list.
None of
And
these.
when I say stellar, okay, I'm saying 20% plus.
Venture Global next decade, or
Were they on the Wall Street list?
oh no.
There were two companies there that I can think can do very well.
Let me go back to those lists then. Where is it? Here it is. Meta.
Is one of them.
Sorry, I'm gonna zoom in, folks. Sorry, my scroll wheel is messed up. I'm thinking you're thinking Microsoft.
CRM, baby. I'm telling you,
Wow.
Salesforce. People think I'm nuts with this. I cannot wait for the end of 2026 to see how Salesforce plays out. We're going to get 4 more earnings reports. And I got to tell you, they're going to be I really think they're going to be the catch up AI trade. They are a cash flow machine. They're harnessing the power of AI. They are the dominant factor in CRM. They are not getting 86th by anybody, and they are continuously growing. And when you look at their long-term plan that they put out through 2030, their revenue and free cash flow is up and to the right. This thing has the potential to go back to 350 next year. Is it going to? I have no idea. But it has all the right numbers. It is got the growth, it's got the buybacks, it's got the vision, and it's got the product.
Yeah, for people that are interested into why Steve may be thinking CRM, it's down pretty substantially. It started off the year in the low to mid 300s, 330ish range, and it's now down to 260s, 270s. So decent retracement for
It's
the
a huge
year.
retracement.
Yeah, and so I don't know. I just until they stop the word vomit, and maybe this is my Palantir bias coming out, but until they stop the word vomit in terms of being able to actually get a lot of traction in terms of agentic AI and actually being able to, stop being so sales heavy and actually get some real innovation coming through, then I think they might continue to flounder. The thing that might help them, obviously, is they are growing. The EPS is growing, the revenue is growing, and so you'll have a floor. But I don't think at the moment, until they figure out that agentic AI piece of their business, I just I see it getting mediocre returns until they figure it out, and they won't get the premium. So maybe I'm cautious, that there are 4 quarters in a year, and maybe we start to actually see some good traction with some of the things that they're doing. But from what I'm seeing, it's mostly just word vomit from Benioff. So hopefully, for your sake, I know you're a big um, a big CRM guy. You've talked about it in the past. Um, fingers crossed for you that they do well.
So I want to bring up several things. So give me a moment. I want to actually find my notes about their numbers because I do not want to give incorrect information about it. I can bring up their earnings report if I can't find my notes. So just give me a moment. I actually have the regular numbers, but I want to push back on the agentic AI stuff because they're actually making a lot of progress in their AI offerings.
Stated progress by Benioff or actual progress?
No, actual number progress.
Because A lot of stuff I see is the CNBC garbage from.
No, I'm talking about the
Benioff.
actual earnings report. Hold on. Okay. So for Agentforce and Data 360, which is their AI and data engines, okay, those are the products that they're layering on top of the traditional model. Agentforce and Data 360, the ARR is 1.4 billion. It's up 114% year over year. Agentforce ARR alone was $500 million, up 330% year over year. Their usage, there's over 18,500 Agentforce deals closed since it launched. 9,500 deals have been paid, and it's up 50% quarter over quarter. Agentforce accounts in production are up 70% quarter over quarter. Agentforce has produced or processed 3.2 trillion, not billion, trillion tokens through their LLM gateway. And in Q3 alone, Data 360 ingested 32 trillion records, which was up 119% year over year. Those are crazy numbers, and their install base is almost 90% of Forbes' top 50 AI companies that run on Salesforce, averaging 4 clouds per customer. So when I see these numbers and I look at Salesforce actual numbers about their revenue, everybody and their mother wants to say that Salesforce is dying, it's a shitty product, et cetera, et cetera. What I see is the Oakland A's. I see a company that is looked at differently, the same way the Oakland A's were when Billy Beane was there. And this is a company that is a huge cash generating company that has never once, Matt, decreased revenue. They're growing their revenue on a year over year basis by $3 to $4 billion. And when I look at the actual numbers, I'm not going to compare them to any company. Okay. Just when I look at their numbers on a trailing 12-month basis, they're doing 11.8 billion in EBITDA. They're doing almost 13 billion in free cash flow with very solid margins. I'm able to pay under 20 times free cash flow, which I consider a value company. 20 times free cash flow and under to me is value. And when you're paying 28 times operating income, 18 and a half times ops cash, and then we look at the forward estimates. Well, I have Palantir there. I did not mean to do that. Hold on. Let me get Palantir out of there. So when I look at Salesforce on a forward basis, I'm going to bring it back up. This is a company that the analyst community expects to grow their EPS from $11.77 to $14.89 over the next 2 years and trades at under 18 times 2027 earnings with more than 25% EPS growth over the next 2 years. This may not be a sexy name. It's a name that people dislike, but these are the reality with the numbers and where the street sees them. And based on a lot of companies catching a bid, I think that Salesforce's AI offerings can outshine next year and change people's perspective and potentially let them catch a bid. The reality is that we're buying a big cash flowing business with huge buybacks and growth. There's really not a lot to hate in this.
Outshine who? You said outshine. Outshine themselves?
No, just outshine the perspective of what people have on them. I'm not saying that their software is better than another company's software. What I am saying is they're the dominant CRM, and the chances are they're going to remain the dominant CRM for years to come, because everybody wants to talk about Salesforce has fallen off. Companies aren't getting rid of them. That's the reality. And it's a misunderstood business.
I think people are really starting to see through the offerings that Benioff is providing. I think they are looking for a way out. So I don't think you're wrong. I just think it's too early to tell um, to see whether or not they're actually going to revolutionize the business. And the fact that they have 18,500 clients and less than $1 billion in revenue is pretty sad.
No, but they
It was there.
just announced Agent Force like a year ago or half a year ago. It
Okay.
just came out.
Okay.
It just came out. They're building that or laying that on top of their core CRM business. And when you look at the numbers for their revenue, this is a company that has never gone backwards in revenue. And it just, in a period where everybody hates them for some reason, their revenue just grows. I mean, this is not a company that people are getting rid of when you're going from 38 billion to over 40 billion. They're just, it's a company that keeps growing. You look at the cash flow statement, the buybacks are more than what some companies are doing in revenue. So they're repurchasing almost 9 billion in stock this year. And that's going to continue to happen as they increase their free cash flow. All I'm saying is this is a value play. That's all I'm saying.
I think it's been hit so much that there is an opportunity for, if they do actually grow, that the valuation stays where it's at. And so you'll be able to get what it grows at. I don't think it's worth at the moment any sort of premium comparatively to where it's been selling in the past. Until
may
they
not,
until they truly
but-
demonstrate.
But at 250 billion market cap, it's a little low for the profitability that they generate and the growth that they have. Now, I'm not saying this is going to be a 500 billion or a $1 trillion company. What I'm saying is that it's probably not unlikely that this gets to 300 or 350 billion next year and that it rebounds off of where it is because the numbers are just too strong for the current valuation.
What's it valued at now?
249 billion. Market cap's
Think-
really low for the profitability they generate.
So you think it's going to increase 40% next year?
I think it can go from between 300 to 350, somewhere there. By the end of next year, I think we can see a minimum of 300 if they can change the narrative. They have the profitability, the narrative has to change.
So that if they go to a 40% increase, that's a stock price of 372.
Which I don't think is happening.
Okay, so it's not going to go to a $350 billion market cap.
Is that what 372 a share is?
Yes.
350? I guess, looking at some other companies, I don't see why not. I do think it'll top out. I don't think there's something that's going to double, but I think it's severely undervalued. And when you look at where other companies are trading, there's people saying single digit growth doesn't get it done for me. It's a lot different when you're a 40 billion revenue company than a 5 billion revenue company. It's a lot different.
Yeah, I mean,
Or growth factor.
what you're saying is no, the 372 doesn't have buybacks in, so there is some wiggle room in there. But what you're basically saying is that it returns back to all-time highs where it was in 2025.
I think it can get back there.
375 plus.
If they can change the narrative, I think this will be looked at as an AI catch-up play. And the reason I like this more than Adobe, even though Adobe's numbers are a little stronger from a valuation perspective, I'm very worried about Adobe's competition from Grok.
Salesforce's competition.
Where's Salesforce's competition? Where's their competition?
I don't think I'll change your mind on it, Steve.
I'm just asking where their competition is. Because I've gone through their annual report, I've gone through the deck, I've gone through everything. Nobody is getting rid of Salesforce for their CRM. Companies are embedded in it. And if there's a company that comes out with a better product and Salesforce loses customers and the revenue stalls, I will change my tune. But that's not being reflected in the numbers. And I'll use your word, yet. It is not being reflected in the numbers yet.
I'd rather pay the big bucks, Steve.
Man, what do you know that I don't know about this?
No, I mean, I think you're entitled to your opinion. I'm not going to try to talk
Yeah,
you
but
out of your opinion.
you're making it seem like you got some secret that you know that there's a company that has a competing product that's winning customers over.
No, I mean, Palantir is an ERP suite, and they're starting to get that up and running, and I think it's really starting to take off. But I mean, in terms of CRM and things like that, Palantir doesn't really have a dedicated CRM. Um, so I don't know.
Right now it's a sticky business. Does a company come out like a Microsoft embed in their Dynamics platform? Does Oracle embed in their Premier Suite? Does SAP embed? Does Workday embed? I have no idea. It would make sense for them to try to do it because a lot of companies are running their HR and financial services on those platforms. It would make a tremendous amount of sense, but they're not doing it to my knowledge right now. So once again, until Salesforce's numbers start to decline on revenue, as long as the revenue is still growing and the free cash flow is still growing and the profitability is this strong and the buybacks are this large, this is something that I think that we can really see a catch-up trade next year on. There's value to be unlocked. It's one of the companies that has a tremendous amount of hate on it. And at some point that turns. Look at Cisco and look at IBM. Those were two dead companies that everybody wrote off, and both of them broke out this year.
Mhm.
That can happen to Salesforce. It may not, but it could.
There you go.
I mean, guys, when you say net income fell for 3 years in a row, look at 21 to 23. Net income is much different than cash from operations or free cash flow. There are other things that impact net income, especially acquisitions, having to take on debt and increased interest payments. There's a lot of things to look at. Look at it for the company it is today.
You heard it here first.
But out of that list, what did you like about that list and what are you putting into other than Amazon?
Other than Amazon, specifically on all the lists for all the Wall Street top picks, or on Mitt's list
On the
that he
one
that
that
he
no,
keep
on
on.
the one that Amit did with all the investment houses um, picks. And yes, I can poll all you guys about this question.
This is Nvidia, Nasdaq, Google. I don't agree with Google. I heard what maybe it was what I think Amit asked Chris Patel specifically. I pulled it up again if people want to look at the list. I think Chris Patel was on the Market Open, and I wasn't sure. I didn't check out the market close. I was catching up on billions because my mom was out of the house.
Ooh.
And
Oh, before you
I
go on, where are you on billions?
like middle season 5. I really haven't been able to catch up. I mean,
Okay.
as much as I would like to. I mean, I'm trying to spend as much time with family as I can. So I've mostly been watching what others want to watch, so that I'm not disrupting or anything
Gotcha.
like that. So,
Okay.
but yeah, my mom was out of the house, so I took some liberty to catch up on a couple episodes. But I think Google, um, this was a name, and I know people have been buying since the single digits on Google, but this is a name that I was buying below 100 in 2022, added more in 23, 24. And it's like moving a mountain, right? Like I think Google has so many different fingers in so many different pies, and I've always been very strong on GCP in terms of its operating margins continuing to grow, and I think people are finally starting to see that. So I don't know, unless they're able to pull a rabbit out of a hat again in the next couple quarters, which is plausible. I mean, they're growing really well, and the ops margins aren't done growing for GCP. I think it's hard for Google to be able to pull off what it's done again. So there's that piece. What else is there? Airbnb is tough. So Airbnb, unless they have a massive growth in top line revenue, I think it's going to be tough. And reason being is for people that aren't familiar with Airbnb's business model, they collect all the money up front for all the trips and everything like that, and the majority of the money that they make is from net interest income on holding that capital. So if they're able to hold, let's just say 20, 30, 40 billion dollars worth of capital, they basically just sit on it until they pay. And as an Airbnb host, I know how this works, right? So people are booking my house, your houses in Jersey, you know, 9 months a year ahead of time, and they're sitting on that money. That money's been paid for. They're just sitting on that money until they pay it to me, and they don't pay that to me until the second night or the end of the first night of check-in. So basically, they're just sitting that in an escrow account waiting to pay it out to me. So they're basically making all this money as it sits at interest income. Well, if interest income goes down or interest rates go down, they're not going to be able to make as much, and so it's going to be tough from that perspective to be able to make as much money. So in terms of net income, I think they're going to be challenged unless top line goes up. I don't know. I still think that they're. I haven't gone through all the different companies yet. I think Webull will continue to do well, but I don't think it's going to get the recognition it deserves maybe until 2027. Um, Nvidia, I think will do well in the first couple quarters, but I'd still am cautiously confident that the second half there might be a start of a slowdown, and people see that. So 2027, I think in late 27, more particularly, I think people are going to start to see capex slowing down um, until justification around all this AI build out is really solidified. And so when that happens, I think Nvidia might take a dive. Um, not saying it's going to zero or anything, but I think it'll be re-rated. Um, I think Venture Global and Next Decade will be good ones, but they're not on here. So, and I do think that there's going to be select, and we've talked about this, select companies that are kind of consumer discretionary stocks or consumer staple stocks that haven't been favored recently that might get a re-rating as well, because people have been so hyper focused on these tech stocks.
So, Matt, this is for you, not Steve.
Well, she paid
Thank you,
you
Mila.
and not me. So regardless if it was for me, it's going to Steve.
And Orc, thank you very much. I can't look. We're not financial advisors or your financial advisor. I mean, look, this is what I would say to you: figure out where you want to be
Yep.
in the future. Figure out. Look, you're talking about a significant amount of money. Okay, I don't care what anybody says. 1.5 million is significant. I can only tell you what I would do. Okay, I would look to protect that money. I would not look to go into high beta names. I would not look to take many chances with it. Maybe I would break it up into sections and say, you know what, of this 1.5, I'm going to put a mil in the S&P, or maybe take 500 and put in the S&P and 500 in the total market fund, diversify it, probably take a little bit, put it in 10-year T bills, I would really have to think about it. I think there's a couple of ways to structure it. You need to do your comfort, but I would only use no more than 25% of that to go into individual stocks. At that point, I'm really on the camp of based on that age and that amount going in preservation mode.
Mhm.
Matt,
Yeah,
what
I
do you
mean,
think?
for me, you said you got it through an inheritance, so I'm sorry to hear for the loss, and I think
Yeah.
before you make any rash decisions, at a minimum, I would take 6 months and potentially put it into um, just the like a high yield savings account or a CD, and really think through really what you want to do with it rather than deploying it all at once. And I know that might not be the answer that you want. You want to get to $10 million today, but to me, I think you need a clear mind to be able to think about this appropriately. And even if it's 3 months at a minimum, put it into something that's high yield. Don't touch it immediately. Think about it. Walk through exactly. This is a large lump sum of money that you've come into. I would seriously think, all the key things that we talked about. Your objective, like Steve said, I agree with 100%. Your time horizon, what are you going to be using the money for? Your risk tolerance is, you are 50, so you know, depending on other money that you have, maybe this is the only 1.5 you have. Maybe you already have a couple million. I don't know the whole situation and landscape, but you do. So consider all those sorts of things, how actively you want to manage it or how passively you want it to be, and how much additional money you're going to be adding, right? Because you're starting at 1.5, you're 50. Say you have 15 years, you're going to work till you're 65, let's say. What can you do with it? Or, depending on where you live in the country, maybe 1.5 is enough for you to kind of retire. You don't know, I don't know your whole situation, but, if this is somebody who was very close to you, first and foremost, sorry for the loss, but second, maybe wait for 3 to 6 months before you do anything.
And look, this is also just one piece of the pie, depending on what the other assets are and stuff. And maybe a T bill isn't the worst idea. I mean, 1.5 on a T bill at 4% is
Yep.
cash flowing 60 grand a year.
Yep.
So there's all different things. So becomes a preservation thing, and also you need the full picture. And the most important thing is you got to figure out what your goal is, because your goal is going to be different than anybody else's.
Yep. 100%.
Well, Matt,
Hopefully it allows you to stop stressing so much at work. I know that's been something as the portfolio for me has grown. It's allowed me to give my true honest answers, that I might not have been in the right mind to say, in the past. Because let's just say, like, I need this job, I need the income, etc. Now that you have a little bit of, less stress potentially on the bottom line for yourself and where you're headed, it might allow you to prioritize other things. Family, maybe for one, or I don't know your situation, like I said, but the thing that's helped me the most with this is that I'm actually able to answer questions with a lot more freedom that I may have been in the past. And maybe that's a positive and or negative depending on how you look at it. But um in the past, I used to be more of a yes man. I still am a yes man for sure, but um if I don't agree with something wholly, more than happy to push back. Whereas in the past, I used to just say, "Yep, whatever you need." I don't, not gonna push up against or ruffle any feathers. Um, so
yeah. So I also think Matt Meta can do very well next year. If Zuckerberg doesn't mince words, I think that he can really change the narrative on them. So we'll see what happens.
I think Meta will be good. Their house of apps continues to do well. So
So what else do you want to discuss tonight, Matt? 10:35. You tell me.
I might call it, man. I might go hang out with my mom for a couple minutes
Okay.
before she heads to bed. Did we want to pop into Alex's stream quick and buy anything, or he's probably calling it, and we might be in a line if we actually get to
He's
it.
still
So
on. Do you want to enter the Thunderdome?
we can, but I don't have time to wait around for 30, 40 minutes if he's got a long line of people. So
Hold on. So he's not playing music. Can I play his stream?
if he's not playing music, then sure, I think so.
All right, hold on. He's still going. I gotta share it. Hold on. I mean, Matt, do you want to go to his website and buy something? Or if you don't want to do this night, we can do it another night. Up to you.
Like I said, I mean, if it's something where we're not going to be waiting forever, then I'd be more than happy to wait. But if it's something,
Oh, it says open queue on his screen, Matt.
what does open queue mean?
It says open queue. So I guess if you go on his website and buy something. So everybody who doesn't know, Matt also is a investor in cardboard like myself. We may be entering the Thunderdome, and maybe we'll get some luck like I got with medium rare on the stream. I'm gonna put them on real quick. So just letting everybody know, this may not be your cup of tea. So if you came just for the stocks, we really appreciate it. We're gonna have a little bit of fun and maybe invest a little on the cardboard.
Is jumping in 3 packs. We got 3 packs of Destined Rivals.
Matt, go to his website and see if you want anything. And everybody, I'm going to stay on for a little bit even after this. So
Let's see.
you have his website, right? Nostalgianomics.com.
Yeah.
I bet. Last pack. Oh, come on. All right, we're still going to send you home with something. Hold on. We got some goodies over here. We got some goodies over here for you.
So last night, or I should say on Saturday night, we
All right,
pulled a Phasmetal Flames Charizard that
Tafer.
is 500 raw, and if we get it graded at a 10, it's going for 1,800 to 2,000 right now. So Maddie may test his luck in the Thunderdome. Let's see.
Guys, we're in Streamception on Steve's channel. Streamception. What are we doing, man?
He's funny, dude.
Are we ripping?
He's a funny dude.
No. Maddie, are we ripping? What are we doing
tonight? He doesn't got to worry about
Uncle Maddie's.
Guys, the queue is officially
ripping.
open.
Let me see.
We are going to be shutting things down here in the next, I don't know, 15 minutes or so.
Oh
So
man, what do I want to get?
out there that does want to jump in for some,
I think I'm going to do
rips,
2
feel free
celebrations.
to do so.
Okay.
We're figuring it out. Take your time, man. But yeah, anyone wanting to jump in for some last minute rips, feel free to do so. Links in the top of the chat and top of the description.
Maybe 6 Mega Evolutions.
Uncle Maddie's on the site. All right.
Delivery.
But yeah, we got there's 3 bounties left. We got Destined, Surging, Paldea. All of those are still left.
All right. So real quick, everyone, the reason why Pokemon is so interesting is because over the past several years to decades, it has outperformed the S&P 500. I specifically got into this as buying sealed product, but keep in mind, I'm in a different position than people, and I can sit on these things for a long time, and it is not a large position of my overall investments, but I am into cardboard and collectibles, and I have no what's the right words to say? I have no attachment to Pokemon. I never played the game. I never did any of that stuff. I just look at it as an asset that has outpaced the S&P. And people thought I was crazy when I bought a box of Evolving Skies for $435. It is now worth, I believe, 2300, and I think it hit close to 2700. So my strategy on Pokemon as an asset class is I buy sealed booster boxes. I leave them sealed and they are in a storage unit. Now, I am planning on holding those for 10, 20, 30 years and then either exiting the position or gifting them to my nephew. But Medium Rare is coming to a very large card convention with myself and some people in the middle of January, and he's going to see firsthand how crazy this industry has gotten. Now, Alex, he's been on the channel. He's a friend of the channel. He runs a very large rip and ship business, which is what he is doing right here. This is not investing. This is speculating what Matt looks like he is about to do and what I did the other night. If I did not pull that Charizard, it would have not have been a good night. But that's okay because I really never do that. Alex is very entertaining when he does this, and he does huge numbers. I'm not going to disclose the numbers that he does, but we have talked offline. He does huge numbers with this. And he makes great content about actually investing in this, very short videos, 8 to 12 minutes.
No,
It's
the
really
videos
good.
that he does are really good.
They're really good.
All right, I think it's gonna go through. Hold on.
All right.
Let's see.
Maddie's going to enter the Thunderdome, and I may enter the Thunderdome.
All right.
Ooh, all right. Maddie is
see.
in the Thunderdome.
Dude, Brandon's got to be on cloud 9 right now, man.
Let's see. Yeah, we went through. Okay, good.
And a Serrano full art. We're not stopping, guys. We're not stopping. We ain't quitting until it's finished. We got to kill watch rolling back. We're not even halfway through the packs, guys. This is absolute insanity.
Steve, are you going on the Thunderdome now, Steve?
I may.
Dialga.
I may take a little look.
I'm seeing a Matthew F. Matt's orders in. Okay, Steve, I figured, man. I figured. All right. Matt F is up next. Matt F.
Celebrations isn't a cheap pack, man, so I'm kind of excited.
Best of luck to you guys. They're just chilling on stream, watching me rip them.
Oh god, it's funny,
guys. If you weren't here last night, man, we ended the night out with Steve getting a box of Phantasmal, pulled the Charizard SIR, walk off home run.
I don't got that Steve Fiorillo money, so we're not going to be opening up 36 packs.
The hits are still coming. Brandon T, man.
Matt, if I had your money,
all the bad openings we had together.
You say that, Steve, but
this makes us even.
Amit said earlier, medium rare on
the
stream earlier said that you.
Can we end it with one more
big hit? You got a cool 20 mil. That's what he said.
Not over yet, guys. Remember, all it takes is a pack and a dream.
He did not.
All it takes is a pack and a dream.
He did not just say that. A pack and a dream.
Come on, Surging.
Oh, God.
Eternatus.
I feel like I need to bring back weekly.
You do. When are you doing this?
Cyclizar, a rainbow rare. All right, Brandon T. It all comes down to this, man. Rub it for luck. You got to rub it for luck, man. And Chien Pao. All right, man. Let's check it out. See how we did here.
Let's see.
Remember, guys, this is only 20 packs. We got Stunfisk, Cyclizar, Brilliant Blender, Executor, Latias, Kilwattrel, Serrano, Appleton, Miracle Headset. We got Mesprit, Latias SIR, and Latios Illustration. Brandon, congrats on all the hits, brother. Incredible.
I know nothing
Incredible.
about what he's saying.
All right, next up, Matthew F. Live on Steve's channel right now. Matthew's got a YouTube channel, I believe, too. I don't know the name. If Steve wants to post it in the
All right,
chat,
we're hoping for like a
you guys can
Mew.
go follow him.
Matt, why don't you
Surfing
post your
Pikachu.
They're
channel
gonna
on
be
this
on the
stream?
stock market finance side of things.
Oh, yeah, good point.
But all right, Matthew F's up.
I don't
2
think I
packs of
have.
Celebrations, 6 packs, Mega Evolution. All right.
I'm not a.
We got
I'm not
1,
a,
2, 3, 4, 5, 6.
I'm not a mod in his channel, so I don't
2
think it'll go through.
packs
Mm.
of Celebrations. 25th anniversary. All right, Matthew F. Best of luck, my man. Here we go. Mega Evolution. Starting out with a Mystery Garden full art.
I don't know if that's any
Always
good.
nice to start with a hit. All right, Mystery Garden. All right, pack number 2. Feeble, Raboot, and the Buddy Poffin full art. 2 for 2.
All right.
2 for 2.
I don't know if that's good. We'll have to
All right,
look
keep
through.
Keep them coming. Can we go 3 for 3? Can't go 3 for 3. That's okay. We still got 3 packs left. Greatness is upon us.
Oh, this is the Mega Evolutions. That's why.
All right.
I was looking
Last 2
at
packs,
Celebration. I was like, this isn't Celebrations.
Last 2 packs, Matt. Come on, man. We got this. Mega Lucario. And it all comes down to this. Last pack of
We'll see,
Mega
Steve.
Evolution. All right. That's okay, man. That's okay. We got ourselves the Buddy Poffin, the Mystery Garden, and the Mega Lucario.
All right, Steve.
3 out of 6 at the 50% pull rate. Not bad. All right. Celebrations.
The big ones.
1 pack.
These are
of
big. These are 35 a
Celebrations.
pack.
We got Ho-Oh. Cosmoem. Lugia. And a Zamazenta V. All right. And we got one more chance.
Let's see, Steve.
Come on.
Let's do it.
Come on, baby.
We're looking for a
Hey,
Mew,
Veltal.
Surfing Pikachu. Something like that.
Kyogre. Here it comes. Here it comes.
Steve, what do we
Here
got?
comes Team Rocket Classic Collection. And the full art Pikachu in back. All right, not bad. Not a bad pack. Full art
All right.
Pikachu. Here comes Team Rocket Classic Collection. We
Let me
take
see.
it. Matt, not a bad break, dude. Team Rocket, Pikachu, Zamazenta, Buddy Poffin, Mystery Garden, and the Mega Lucario.
They're not
Get the rest
horrible.
of these Celebrations hollow sleeved up for you as well. Matt F., thanks for jumping in, Steve. Hope you guys had fun with that one. Guys, we are going to be turning off the orders here in a second. So
Steve, where's your order, my guy?
finish up your last minute
I'm
orders.
debating what I
We'll be
want to do.
closing down the store momentarily. The queue is exploding right at the end of the night. I know how you guys love to do that to me, but we are closing down.
He's gonna
here
get
just a
so
few.
pissed when I text him
Get
this.
your last minute orders in if you would like. When the store is closed, it is closed.
No, it's not
Steve.
closed.
All right.
Hold on.
Anthony C is up first.
Store's not
And
closed,
then we got
Alex.
Anthony M. And Brandon A.
I don't know, Matt. Full box of Surging Sparks.
All right.
Whole box of Surging Sparks.
Anthony C. Oh, wait, we got
Dude,
Anthony
Surging
M is before
Sparks.
Anthony
Didn't you
C,
do
my
Surging
bad.
Sparks yesterday?
Anthony
No,
M,
I
then
did that
Anthony
Battle
C,
Plans.
and then we got Brandon A.
That's
All
right.
right.
Let's see. What are some good ones that you got? Surging
All right,
Sparks
let's
is
see. Anthony M is getting a box of Chinese
singles.
Volume
What do we
4.
got?
Chinese
Ooh.
151 Volume 4.
What, he's got Chinese in there? Hold on.
Steve, I'm holding on, dude. You got to remember, us regular people who don't live in like the city that never sleeps, us in the Midwest, we actually go to bed, dude.
No, you
We actually
don't.
sleep. You got to remember that.
So the Pikachu is what you want to
You
get.
could probably call Steve at
In
like 3 a.m. and he's like, yeah, I'm
Surging
out,
Sparks.
researching some stocks, man. Got a Seeking Alpha article. I got to be at work, man. I got to stream for like 8 hours.
He's just roasting
got
you on your own
Articuno.
stream.
All right.
Come on, Anthony. We got this, man.
We're
got
gonna
this.
take a flyer on something.
Mew EX.
What do we got, Steve?
I think we're gonna get one of the
Mew EX.
Chinese boxes and try to pull the
Sleepest for
Gengar.
the week.
All right, hold on.
Which one of the
got me,
Chinese?
I am
He
making
got
an
me. I am the
order.
weak. Charmeleon.
Hold your horses.
And by Chinese, you mean Japanese,
Come on,
right?
baby.
No.
We got the Flareon
No.
Hollow.
He's got specialty Chinese boxes.
I need more CZ.
Let me
Please
see.
wait.
Oh, he does.
Incarnate, you've been here all night, bro.
Ooh,
You got
Chinese
all night to order.
151.
What do you mean, please wait? I've seen you in here since the start. We got Poliwrath, Vaporeon. What else we got? Come on, 151. We got ourselves the Doug Trio. Anthony, I'm trying, dude. I'm trying my best for you, brother.
I don't see any of
trying
the
my best.
Chinese for open though.
We got Clefairy.
But can you buy any sealed product and have him do it?
Yeah.
Is there any Pokemon in this rip and shit?
Give me.
Hey, we got Kadabra. Kadabra.
Did you have to log in, Matt?
Shiny.
Um,
Nice hit.
no.
Okay.
Nick G, it is
Whoa,
Pokemon and
excuse me.
only Pokemon tonight, my friend. Mewtwo
So
Hollow.
we're gonna take a little. He's got a little bounty up there. We're gonna go with some
We got
Destin
Metapod.
rivals also.
Got the Metapod
like it.
Pokeball. Anthony M is Wolf of Amazon. Anthony, you are up next, sir. Or wait. Wait, this is Anthony. Oh, this is Anthony M. My bad. This is Anthony M. I'm sorry, dude. It's so weird. We had two Anthony's order back to back. What are the odds of that? Get me all confused.
Steve, what'd you
Anthony,
decide?
not bad though, dude. We got the
I'm
Zapdos
finishing my
EX.
order.
It looks like Kadabra is going to be the hit of the box.
Ah,
The
Steve, man.
151 boxes are a little more difficult than the
The
Gem boxes,
nostalgia's killing it, man.
but still not
36K
bad, man. Let's
stuff.
check it out. We got to the Zapdos,
Let me post them on
Clefairy, Electabuzz. We got Metapod
our channels.
Poliwrath,
I'm finishing my order.
Charmeleon, Doug Trio.
So
we got
everybody,
Mew,
we're going
and
back to the Thunder
Kadabra,
Dome. I'm
baby,
just debating on
shiny.
how much I'm
Anthony,
actually
thanks for
buying.
jumping
here.
in. Appreciate you, dude. Hope we got some hits you were looking for. Hope you had fun. You said you're here for fun. Hopefully you had some fun. Anthony C's up next. Got 10 packs of Destin Rivals.
10 packs.
1,
Let's
2,
go.
3, 4, 5, 6, 7, 8, 9. 10 packs
Like Matt, I'm debating just doing a
Destin
whole box
Rivals.
of Destin Rivals at this point.
for Anthony
I don't think
C
you will,
this
Steve.
time, guys.
I did a
Anthony
box
C
the other night.
is getting the Destin.
Let's see.
Thanks
What
for
are the
first
individual
one. Thanks
cards
to
that you want
Steve.
out of
Oh, that's
Destin
awesome.
Rivals?
Steve sent you. Anthony, man, appreciate you, dude.
You want a
Got
Mega
Yanma.
Lucario, Gardevoir.
All right,
Come on,
Or-
Team Morocco.
I'm going to do the
We got
Chinese
cards flying
box and a
everywhere.
couple
What
of
is
packs of
happening?
prismatic.
All right, gotta get back on it, guys.
I don't think you will, Steve.
No, I'm
Gotta
doing it
get
right
back
now.
focused.
Check out
We got
PayPal.
Hydrapple.
Oh, we got Steven G ahead of Steven F.
Incarnate is in. He's in with his CZ.
All right.
We got
Team
Steven
Morocco
G Arilla.
Moltres. Come on, Anthony C. We can do better. Destin Rivals has some of the best
Boom,
cards
boom,
of the era. We just got to
boom.
hit them. We got Electivire EX.
Finish paying
Anthony's
Alex.
confused everything. Oh, there we go. Team Rocket.
All right, we're in there.
Got the green card.
I actually have two of these boxes
I
sitting
mean,
in
not
another
bad so
room. I
far,
haven't
guys. 4
taken
hits
them
already
yet.
out of just 10 packs.
The
Still got
unit.
packs left. There it is. Ethan's Ho.
Of which one? The Destin Rivals?
No, the Chinese. There's a
Rolling
crazy
in now.
Gengar Pikachu that's very expensive.
5 hits already.
Am I messing up by not buying a box?
Wobbuffet
I mean,
and
I don't know what the
last
pull
pack
rate is.
magic.
The force is
Last
with us,
pack magic
everyone.
is Greedent. All right.
I think the force is
Anthony
with you,
C.
Steve.
5 out of 10. We take it.
Shop all
Psydups,
Japanese.
Yanma,
Let's
Ho-Oh,
see.
Electivire, and Moltres.
Advanced.
So for those of you that just came, we are pretty much done talking about stocks, Matt and I. We are just entering the Thunderdome with friend of the channel, Alex. And Matt and I invest in alternative assets. Right now, we are speculating, trying to pull some stuff. And, this is what we are doing right now. I'm probably going to stay on for just a little bit to talk about stocks. But I don't know. We're entering the Thunderdome right now.
Fates for Brandon A. All right, Brandon.
All right. We will be in the Thunderdome in 5 people, so I'm going to take him off the sound for a few minutes. I mean, Matt, this is getting really big with alternative assets. And for all you that are still here, thank you very much. We're just kind of shooting the shit right now. But if you watch CNBC, they're really talking about alternative assets a lot these days. And I do think that this is going to become a very big asset class that gets tokenized in the future where you can buy pieces of collections. I think BlackRock will do something. I think there's a lot of people that are going to do something with this.
Yeah, I need to buy the Mega Evolutions base pack before.
And look, what I'm doing and what Matt just did, this is not investing. This is pure speculation. Please do not think that you are going to pull the Charizard that I pulled the other night. That was dumb luck. Okay. If I pull anything tonight, the force is with me and it is straight dumb luck. Okay. But right now I'm speculating because I want some specific individual cards and I'm just trying to get them without having to stuff that I have.
I'm trying to pull up on TCG. I don't think they have the Chinese sets on here.
They do. Oh, wait, no, on TCG?
Yeah.
I don't think they do. I think all they have is Japanese.
Yeah, all they have is Japanese.
Yeah. And for those of you asking about One Piece, I made a very big mistake. I was told to buy OP7 and OP8 from the card shop I go to, and I didn't. And One Piece has skyrocketed. Absolutely skyrocketed. I can't believe how much it's gone up. I mean, OP8, I think this is OP8, is $265 a box. I was able to buy them at 90 and I passed. It's crazy what's happened with One Piece.
How could you, Steve?
How could I screwed up? Yeah, yes. What Zeppelin? I hit the Mega Charizard from Phasmatal Flames, the one that's going for about 480 or 500 raw. So I'm sending it out to get graded. And if it comes back as a PSA 10, Alex and I talked on the phone today. I may trade it in for like 8 boxes and just rip them. So we'll see.
I mean,
or
what's your thought about that?
I don't know.
I'm just wondering, like, I'm sure if it's a PSA 10, Steve,
yeah, it'd be 1,800 to $2,000 if it's a PSA 10.
But I'm just thinking, like, long term. I don't know.
Yeah, I don't know. I mean, look, obviously that's a gambler's fallacy right there, and it's horrible advice. But I have a bunch of boxes of it, and I don't necessarily. The card looks awesome, but I don't have an attachment to this stuff, so I could flip it into something. I don't know. It's nice to have options.
That's why they pay the big bucks, Steve.
Matt, this is the one though that I'll show you after he pulls the stuff. Oh, I think this is me, is it?
Man, Stephen F. Everybody.
Oh, here we go.
Going for the prismatic. Kieran, Slow King, and Noctowl.
Skunked.
Come on, man, we got this.
Let's go, Alex. Force is with us.
Hoot Hoot and Archaludon. Diplin. Gee, Steve, man. What is happening? All the lust from the other night did not translate to tonight, dude.
Can't win them all.
It didn't translate. Wait, it did.
No, it
we
didn't.
got the gold walking wake, baby. Got you a gold hit out of prismatic.
Is that good?
All right.
Let me see.
The luck prevailed.
Is that good? I have no
gold
idea.
Walking wake. Nice hit, man. Nice hit. All right, Steve.
Let me see.
Why did he just time out? What happened? Is that me or you? Hold on, everyone. Don't know what happened. Don't know what happened.
That was my fault.
I do not know what happened.
Did he time out? Or is he
Yeah.
at?
No,
Everything timed out.
we do not have what it takes. Still not a bad opening overall, man. Psychic Energy, Leafeon, Stoutland, and the Oricorio. Ryan, thanks for
Where's the walking?
belly bolt out of this one. But hey, we just got the Jesse James. So translate to tonight, dude. It didn't translate. Wait, it did. We got the gold walking wake, baby.
There you go.
So I
Got
think
you a
that's
gold
where-
hit.
this
Yeah, that's
basically
Out
fair.
is
of
what-
Prismatic. All right. The luck prevailed. Gold walking wake. Nice hit, man. Nice hit. All right. Steve comes through with the gold walking wake.
How much is that worth though? I have
What
no
is
idea.
going on with the
Not
queue,
that
guys?
not that great.
We got Area Zero under depths in Houndour. Man, we are out of control
see the
right now with
Houndour.
the queue. Houndour and Area Zero under depths. All right. Area Zero Houndour. Congrats on the walking wake and the Master Ball Houndour, man. Good luck. Good luck on the Gem 3 box.
All right, we want the Gengar out of this. Is what we want. We want the Gengar.
All right, here we go. All right, Steve, let me go ahead before I start that. I got to close down the store, dude. Let me close down the store real quick, and then
I
we'll
wonder
get
how
ripping.
many of these people are from you.
I don't know.
Oh wow, the store blew
All
up.
right, so we're looking for the Gengar out of the Gem 3 box.
We're looking for the Gengar.
He closed down the store.
1 sec, guys. We're almost there. Give me 1 quick sec. We're shutting down for the night, but don't worry. Everyone who has an order in will get open tonight. That is always my promise to you. If you get in the queue, you will be opened up tonight. We don't leave any stragglers. All right. If you didn't get in tonight, you want to get in next time, we go live again at 7 p.m. Central Time. The packs go up for sale usually morning or midday, so you can order, you can pre-order or get here at 7, between usually the hours of like 7 and 10 Central. We're open for packs. All right, Steve, let's do this, man. Let's finish them out, brother. Here we go.
Let's go out,
Here
Steve.
we go. Starting out with the Morpeko Master Ball.
I feel like he's speaking Japanese.
We got
Yes.
ourselves the Gardevoir Master Ball.
In this case, Chinese.
Cubone Master Ball. Come on, man. Where are the hits?
Where's the Gengar?
Where are the hits? There's a Mimikyu illustration from the old Chinese box.
That's a cool card. I've seen that before.
All right, it's the first hit, Steve. First hit.
Can we do it?
I think we got it, Steve. Gotta have it.
We got the Absol EX. Got the stamped Lycanroc. Clefable EX.
Not many cards per pack.
No.
Small packs.
What's funny is I know Steve's sitting there watching this, and he probably has no idea what he's looking at.
No
He's
idea.
just waiting for me to go crazy over something.
It's 100% true.
Oh, we got Lycanroc
It
EX.
is so true.
You know, it'd be funny if we duped him and I just went crazy over some random card and
That'd be
just faked him
hilarious.
out.
He could, though.
Absolutely.
We got the Houndstone Master Ball. Gardevoir. The Houndstone EX. We got the Gengar.
Not the Gengar we wanted.
Nah.
Come on, Gem 3. All right, we got the stamped trainer. the Houndoom EX. All right, we still got 2 packs left. A pack and a dream, baby. A pack and a dream.
Packing a
Master Ball
dream.
Annihilate.
Packing a dream.
And the last pack of Magic is
Dingo.
another
All
Master
right.
Ball. All right, Steve.
All good.
We got you all these fine EX hits, sir. Here are all of your Master Balls and stamp cards.
I don't even know.
And the box hit was the Mimikyu illustration rare, sir. Congrats on that, and congrats on the Walking Wake Gold.
What the
Appreciate
hell
you
is
jumping in, man. Hope you guys are having a great stream, having a fun time. All right, let's see where we're
Hot
at.
Steve, man.
All right.
All right, so we have Mr. Lee H up next. 3 Destin Rivals. We
All
got
right, well, that was
3
fun.
packs of
That
a
was.
Destin.
We are not going to do that every time. I can promise you that. I am, all good, but always a good time. Can't always.
How much?
hit the
How
big
much
one.
were the Chinese? How much was the Chinese box? If you don't mind me asking.
75, I think.
Okay, yeah, it's not that bad.
No. I gotta see if there's anything. I'll call him tomorrow and see if there's anything worth grading out of there. But I mean that whatever card everybody was saying was 45. I'm gonna send it out to grade and I'm gonna sell it. So I'll try and get my money back from it.
Which one?
The people in the chat were saying that the gold walking thing or whatever it was $45 card. I'm not seeing it on TCG Player, but I'm gonna send it out as graded.
Yeah, I mean if it's worth it, but I was seeing it as $5.
Maybe it's 45 if I grade it.
Maybe.
Okay, yeah, Walking Wake EX is what he said. Okay. I'll check eBay. I'll see what it is on a PSA 10 and go from there. But yeah, definitely do not do this all the time, guys. This is just us trying to be degens for a few minutes.
That's why they pay the big bucks, Steve. I'm telling you.
After we gave out, set yourself up for financial freedom, and then we roll into the Thunderdome.
The degenning.
All right, Maddie, I'm going to stay on for a little bit. If you got to go, I will talk to you tomorrow.
You're the man. But yeah, June's right. You could probably tax deduct that card since it was entertainment for the stream.
I mean, listen, there's a method behind the madness.
There is. All right, my man. I appreciate you. And yeah, I think it was one of our better streams. I need to take sound clips out of some of it because there's a lot to learn in there, especially about the Trump stuff. I think people need to spread that around. So
I think we need to do dedicated videos on that stuff.
Yeah.
So
yeah.
Sounds good.
You work, man. I'll talk to you in a bit.
Later, Matt.
Later,
all right, everyone. So it looks like if this will get that Walking Wake card will get graded with the Charizard. It looks like it's selling on eBay for $90. So if I grade it and it comes back at 10, I will be selling it and I'll be down 25, $30 on what I spent tonight. But once again, do not do this. Do not follow me on this. This was just entertainment. And because I felt like maybe we could stay on a heater from the weekend, but it is what it is. So I'm just going to interact with the chat for a while. And it's 11:09. I'm going to go to 11:30 and then head out. So rapid fire questions. No, the last lesson of the night was not after you make it. It's okay to degen. I have not made it. I am still heavily investing. You can never, this is the thing, you can never get comfortable. Never get comfortable. Never think that you made it. Never think because you have X amount of money, you can go into easy mode. You always have to protect the money and you always have to be conscious. Oh, the movie list. I got to tell you, my movie list is fire from when I stream with Tanner. The problem is I have no idea on how to get it to 25 movies. The movie list is straight fire. So Yoda versus Baby Yoda, I mean, kind of like Grogu, even though he's not taking out Yoda. Just saying. Do I think look, a Black Swan event could happen in 26? I mean, the only Black Swan events I could see is China invading Taiwan, which I think is such a low probability chance. And obviously, if things escalate with Russia, Ukraine, other than that, I'm not really seeing much on the horizon that's going to be detrimental next year. I think we have a pretty good setup for next year. So, you know. Oh, you guys are so nice. My camera quality is so good that you can count my gray hairs in my beard. This is why I really don't grow a beard, because it becomes so freaking gray. It's the holiday season and I'm lazy, so I haven't shaved. Poll to cut movies. Are you guys really interested in the movie list? Like going through it? I'm going to put a poll out. And if we get an overwhelming amount of votes, we'll end it out with my movie list. Do you want to help with the movie list? All right, let's see, everyone. Gray beard with white milk. No bueno, I can tell you that. TV list is going to be next. We will do a TV list at some point. The problem is Medium Rare has not seen pretty much any TV shows or movies, which is kind of crazy. And the fact that I have to watch the first episode of Grey's Anatomy is killing me right now. So, I don't know. And Ian's right. Nobody freaking knows what the Black Swan event would be, or I mean, that's why it's a Black Swan, right? Comes out of nowhere. So TV list does get rough. Yeah, no, I'm not watching 20 seasons of Grey's Anatomy or pretty much any show at this point. And the way that I made the movie list is if I'm watching TV and I see this movie somewhere, I'm going to watch it. That's an easy question. Seinfeld over Friends. China can dump silver reserves. I don't think many people are going to care. I mean, Curb is freaking amazing, but Seinfeld's just Seinfeld. I mean, I got to go Seinfeld over Curb, but I'm a big Curb fan. All right, this is what we're going to do. The vote is pretty close. Not many people voting, and it's pretty close. I'm going to do regular questions for 15 minutes, and then I will do 15 minutes for the movies and end it at 11:45. And anybody who wants to stay for the movies will do it at 11:30 because it was not an overwhelming win on yes. So we'll just answer regular questions for now. I don't watch Simpsons or Family Guy, if you can believe that. I've never seen a full episode of The Simpsons. The most exposure I've had to The Simpsons in the past 3 decades was on Christmas Eve because my nephew was in my parents' basement watching Simpsons on YouTube. So, I don't know. Do I ever sleep? Yes, I sleep. Yeah, I'm not a big cartoon person. Not a Disney person, and I'm not a cartoon person. Did not watch South Park, did not watch Beavis and Butthead. I don't know. I did used to watch Ren and Stimpy when I was a kid. That I can tell you. Never seen anime. What did I nerd out on as a kid? I mean, as a kid, I watched cartoons, but it wasn't those. It was, what the hell did I watch? X-Men. I mean, when I was really small, He-Man, Thundercats, G.I. Joe. I need to start South Park. You know what show I used to really like? X-Files. In the beginning, the first couple of seasons of X-Files I watched. I mean, I would say Highlander was a good TV show that I used to watch. Better Call Saul, yes. Hercules, yes. Highlander was amazing. And look, I got a hot take, okay? Hot take. Duncan MacLeod, better than Connor MacLeod. Just saying. And I think that's why in Highlander Endgame, they had Duncan take Connor's head. Oh, we got a lot of people saying that X-Files is peak. I like that. Like that. NYPD Blue was great. Really like that. There can only be one. I agree. Don't do that. Um, don't do that. I can't even answer that question about Seinfeld versus 24. They're just two different genres. Both good. Both really good. I mean, Seinfeld is it's just Seinfeld. Overnight stocks are popping. Are you serious? Where are we on the futures? I'm not seeing anything popping. I'm just seeing S&P up 10, unless this is not the overnight. Today's the 29th. I guess it is the overnight. Married with Children, yes, obviously. Who didn't watch Married with Children back then? Daniel Craig, Sergio is the best James Bond. Stop it. Just stop it. That's crazy talk. Did you see that Pierce Bronson said he would come back? Oh, you know what show I used to watch? Cheers. Love Cheers. I hated Phantom Menace. Attack of the Clones was okay. And whatever the third one was, I can't remember the name, was okay. I wish that none of them were made, to be honest with you. Night Court was hilarious. I mean, I don't know. That's a hard question because they all sucked. Jeopardy, Wheels of Fortune, or freaking Price is Right. They were all bad. I don't know. Maybe Wheel of Fortune. Leno over Letterman. Yeah, I'm with you, Lunar. Family Feud over all those. Definitely. Definitely. Yeah, Saved by the Bell. I think everybody watched that back in the day, right? I watched it. Saturday Night Live in the beginning, yes. USA Up All Night was awesome. Is Henry Cavill going to be the new Bond? Is that real? I know they talked about it. He would be great as Bond. He would be great as Bond. Fresh Prince over Family Matters. Now you guys got me thinking that I should just grow a gray beard for the meetup in February. If I let this grow out for a month, it would be pretty freaking crazy. When was the last time I shaved? I think I shaved the day before Christmas Eve, so a week ago. I did take off of work tomorrow. That is why I am still up streaming at 11:21 on a Monday. I did take off. I have to take 2 meetings though, even though I took off. But they're not till later. Shaving does kind of suck. I will tell you that right now. It sucks. I really should just get an electric razor. PB, you sent another one? Oh shit, thank you so much. Really appreciate it. What Alex said that there's a good chance it can get a 10. He thinks it'll definitely get a 9. And I think the 9s are going for around 750 or so. And he thinks it's got a good shot getting a 10. If he thinks it's got a good shot, I think that it may, and here's why. I don't send it out individually, and I have a theory. I will have possession of that card probably end of this week. I will be giving it to my buddy who does a tremendous amount of business with his local shop. And he will send it out through that shop for me. And I feel that shops that send stuff in lots of hundreds get better, they get preferential treatment. Just my feeling. Can't prove it, but No, I only have one stream. I think Matt's is just staying on there. No, shaving in the shower? No, that's crazy talk. Do not, no. No. I don't want to see Tom Hardy as Bond. He's done too much already in that genre. I don't want to see it. Go to John's on Bleecker, Travel Lover. You won't be disappointed. Medium Rare and I went to Benjamin's Steakhouse today. You won't be disappointed. It is a little pricey. It's well worth it. John's on Bleecker is just amazing. You want good Italian, but nothing crazy that's not going to break the bank. John's on Bleecker or Patsy's, you'll be good. Patsy's is excellent for the price point. Pedro, yeah, I do agree with him. I was not successful in my 20s and I had an excellent social life. I mean, well, in order to really be really successful in your 20s, you have to be locked in and focused. And I just think that a lot of people aren't ready to lock in and focus at that era. I really do. You have to be able to dedicate, not go out. So I think there's some merit to what he said. I mean, I'd rather cut my own steak, but when a porterhouse comes out, I don't mind that it's already cut because, especially if you have it on the table for multiple people, it just makes it so much easier. Yeah, I mean, look, when you're in your 20s, it's just hard to dial in. It's very hard to dial in. My opinion. Listen, you get me on some peptides, maybe I could look like Wolverine. I mean, if I grew a beard like this out when I was younger, like when I was like 32, I definitely would have looked like Wolverine. Freaking Naz. That's hilarious. That is a hilarious comment. Everybody needs to read this. That's hilarious. Milkman energy, not caveman survival mode. Love that. The sign is getting mounted soon, everyone. So speaking about Milkman energy, for those of you who have not seen it, how do I turn this on? The Milk Gang Studio. And I guess when the market is red, we'll have it be red. And when the market is green, we will have it be green. Courtesy of my nephew. Now, if we turn around, oh, look at that. That's amazing. It's on both sides, so we got to hang it like this. That way you guys can see it in the camera. Yes. How smart is my freaking 9-year-old nephew, even though he probably didn't think of that? Crazy, right? Crazy. So we will be hanging that, I think, above the light switch over there. So we'll see. It's going up this week. And the reason I think I'm going to put it over the light switch there is because above where Grogu is, there may be another jersey coming at some point. So, yeah, I got to hang it backwards. That way you guys can see actually what it says in the chat. It should light up whenever you guys super chat. I mean, I'm not going to be able to control it from where I'm sitting, but I guess I could walk over and light it up. Okay, that's not a milk jug behind me, guys. That is a 1 gallon of distilled water for the humidor behind me. So those are humidors for cigars behind me. So the distilled water is to help regulate the humidity inside of them. It's not a milk jug. And I was told I need to clean all that stuff up. So. All right, everyone. It's 11:30. We're going to bring the movie list out. I mean, we should not go down a cigar list. We'll be here for like 3 hours. So let's save the cigar thing for another night. That's too long of a discussion, everyone. All right, movie talk. And thank you everybody for staying. This is you guys are awesome. Really appreciate it. All right. So here's how I did this. And this is now in alphabetical order. This is not in best to worst. It's alphabetical. So I should not say what I'm going to say, but I'm going to. Dare I open that up and show you what's in there? We'll do it on another stream. We will do it on another stream. But how about this? Real quick. Non-Cuban is Opus X Perfection, most likely. Cuban, there's a lot of good ones. I am a big Siglio fan. I am a Monte Cristo number 2 fan. I do like the Monte Cristo Double Eagle. Even though a lot of people think Romeos are overrated, they're not. Patagas, it makes an excellent cigar. I'd have to really hone in on the Cubans to give you a definitive. Non-Cuban, I can say most likely without a shadow of a doubt, it's the Opus X Perfection. Anyway, movies. How I did this is not greatest of all time, blah, blah, blah. It is, if I am going through the channels on the TV, or if I'm going through Amazon Prime, or if I'm going through something, and one of these movies is there, I'm watching it. That's how I'm doing this. And a lot of these movies are not going to be on your list, and probably a lot of them are. I could not have a top 20, or I could not start putting this together without having at least one Steven Seagal movie on, okay? Above the Law, in my opinion, is Seagal's best movie. It's between that and Out for Justice. You can go back and forth. It's either one. And the Ys in column B are the ones medium rare has seen, okay? American Gangster is on my list. Batman Begins, Bloodsport, Blow, Braveheart, Caddyshack, Casino, Casino Royale, Catch Me If You Can, Creed, Crouching Tiger, Hidden Dragon, Days of Thunder, Days of Confused, Dodgeball, Donnie Brasco, Fast Times at Ridgemont High, Friday Night Lights, Gladiator, Goodfellas, Heat, Inside Man, John Wick, Leon the Professional, Lethal Weapon, Lord of the Rings. And if you must know, it's a hard choice between The Fellowship and Two Towers. I think it's The Two Towers. I go back and forth in my mind on that. Midnight Run, Oceans 11 and 12, and I actually think 12 is better. Point Break, Pulp Fiction, Remember the Titans, Roadhouse, Superbad, The Big Short, The Color of Money, The Dark Knight, The Departed, The Empire Strikes Back, The Fighter, The Godfather, Wolf of Wall Street, Tin Cup, Tombstone, Top Gun, Training Day, Troy, True Romance, and Wedding Crashers. It is a very wide net that I cast. It is Joker. Ocean's 12. How is Ocean's 12 the dud out of them? Ocean's 12 is amazing. Ocean's 12 is amazing, guys. So, like I said, there is a lot of movies that I did not put on this that very well could have been on it. I have to somehow get this down to 25. I have no idea how I'm getting this down to 25. I mean, I can take Above the Law out, but like American Gangster is a perfect movie to me. Batman Begins is a perfect movie to me. I love Bloodsport. June, you at least got to cut 2 to make it 50. I know. Trust me, I know. I got to cut 2 to make it 50. I could have put 100 movies on here. I love movies. Forrest Gump is a horrible movie. Horrible movie. I don't know how anybody sat through Forrest Gump. Get out of here. Crazy. How do you cut Dodgeball? ESPN on the Ocho. If you can dodge a wrench, you can dodge a ball. I mean, come on. I don't know how we get rid of Dodgeball. Pirates of the Caribbean. God, such a good movie. Johnny Depp is amazing in it. Oh, that's such a good movie. I do have a Johnny Depp movie on here, though. I got him in Donnie Brasco. Bloodsport's one of the best martial art movies, everyone. Same with Crouching Tiger, Hidden Dragon. I know a lot of people like Ip Man and Iron Monkey. I like them too, but Crouching Tiger, Hidden Dragon changed art cinema. Changed it. Look, Ocean's 13's good too. I like all 3 of them. I happen to like 12 the best. I think the whole angle with the Night Fox is amazing. Johnny Depp is in Blow too. You are right. Blow is on my list. It is questionable whether Bloodsport is based on a real story or not. Nobody can confirm Frank Dux's actual involvement with special forces or the military or his story about the Kumite. So, arguable if it is true or not. I'm going to act as if it is because this makes the story better. So, Ocean's 8 was not a bad movie. Come on. Sandra Bullock was great in Ocean's 8. Mighty Ducks is a great movie. Love Mighty Ducks. Like, if I'm being serious, like if I'm going to be serious, this is going to be on my list. Like if I have to make a very serious top 25 out of this, this has to be there. Has to be. Blow and Braveheart have to be. Have to be. Days of Thunder has to be. It's amazing. Dazed and Confused is just one of the greatest coming-of-age movies. Donnie Brasco is amazing. Friday Night Lights is arguably the greatest football and sports movie ever made. Gladiator, Goodfellas, Heat all have to be. Man, I'm already at fucking 14 already. I'm putting both of these on. I'm putting, God, so hard. Amazing. I got what? 4 more. Oh, it's so hard. I hate doing this. I'm going to look at the comments in a sec. Hold on. I got 2 more I can get. God, this sucks. I mean, Top Gun's going. Has to be. Now, what would I watch the most out of all these? They're still on here. Like, I feel like it's almost disrespectful that I don't have Casino on there. But at the same time, Troy is so amazing. But so is these are all amazing movies. This sucks. Creed is so good. God damn it. Superbad may be going on. Superbad, but Tombstone and Training Day. So crazy. I don't know. I feel like I'm going Tombstone because Val Kilmer and this is amazing. Kurt Russell. So I guess that's my 25. Yeah, if you could, like I said, it's hard to make a top 25 list. And once again, it's not the top 25 best movies ever. To me, it's if you're channel surfing, are you stopping? Like anybody who's 40 or older, tell me you're not stopping on Roadhouse. I mean, in all seriousness, how are you not stopping on that? It is an amazing movie. How are you not stopping on Top Gun? Like, how are you not stopping on Rocky 4? So, and look, for me, The Color of Money and Rounders is on there just because, look, I love gambling movies. I love that whole scene. I love it. And you know what's not on here that should be on here? Clear and Present Danger. I mean, that's a really great movie. And dude, Belly has one of the best openings of any movie. When they're walking through the tunnel. I mean, shit, that club closed down like 20 something years ago. But this is where I'm at on my movies, I guess. Patriot Games is great. I mean, in all seriousness, are there really movies on here that you don't think you would stop and watch if you were channel surfing? I mean, there's not a bad movie on that 25 list. There are movies that you may not like or may not be in that genre, but if you're in a comedy, it's hard not to laugh at Dazed and Confused or Superbad. I didn't even put Superbad on there. Shit. What is wrong with me? Because Rocky 4 is the best Rocky movie, followed by Rocky 3. Rocky 4 and Rocky 3 are better than Rocky 1 and Rocky 2. And I'll even say that Rocky 5 is better than Rocky 2. Rocky 2 sucked. So yeah, this is why I'm in it. Gone in 60 Seconds is amazing. So yeah. Eleanor, I hear you. I've never even seen Mamma Mia. I don't even know what the hell Mamma Mia is. Rocky 2 is the worst Rocky movie. Come on. Caddyshack. I mean, what can I take out for Caddyshack? I love Caddyshack. I mean, what can I legitimately take out for Caddyshack? I mean, I would consider taking out Dazed and Confused. That's about it. Caddyshack's amazing. Jaws is an awful movie. I am sorry, but all these lists that have Jaws in the top 4 or 5 movies are stupid. Horrible movie. Goonies is awesome. No, come on. The training montage from Rocky 4 is the best training montage in all the Rockies. I mean, so, listen, and this is why I like getting everybody's opinion on this. Small Soldiers is a movie that I have not seen in so long. God, that was a good freaking movie. I'm a big old school fan, but I think Wedding Crashers is better, in my opinion. I just like Brain Crashers. Wedding Crashers is on, I guess, the runners up. So I got Wedding Crashers in here on my runners up, I guess. Small Soldiers is awesome. Yeah, only one comedy made the list for my top 25. Party at the Moon Tower. That's hilarious. Could barely get in my bathtub for 2 years. That's hilarious. I love that. You know what movie was really good? Swordfish. I don't think a lot of people like that with Travolta and Holly Berry and Hugh Jackman, but that was a good movie. I do not watch musicals. The only music movie I've seen, I think, is what's the one with A Star is Born? I mean, that was an excellent movie. I will say that right here, right now. I saw A Star is Born in the movies, and it was an excellent movie. I cannot believe how good of a job Bradley Cooper did. Yeah, Fugitive's a great movie. I can't put the Die Hard movies in. I can't do it. I don't think they're as good as the Lethal Weapon movies. I have seen The Heist with Gene Hackman. Let's see. Oh my God, don't do that to me, Heinze. Lethal Weapon 1 and Lethal Weapon 2 are so incredible. I challenge you to go back and watch them. They're so incredible. Inception is not making the list. Interstellar is a good movie, but it's not making my list. No, Inception's in the top 100. It's just not in the top freaking 50. Yeah. Older. Name me. Strange. Name me 5 good older films. Like, none of those films hold up. The Godfather only holds up because you learn every life lesson you need to learn from The Godfather. Casablanca shouldn't even be in freaking top 100. Neither should Citizen Kane. They were good if you want to talk about making this list in the 60s. Stop it. Gone with the Wind is not going in. Field of Dreams is not going in. Remember the Titans, amazing movie. I mean, Braveheart is a perfect movie. It is a perfect movie. So this is where we're at. It's probably not going to change. I'm wondering how many movies Tanner's going to have that are the same as mine. Yeah, I would. I should have put the Matrix. I can't believe didn't make the cut. It should be somewhere in there. Kingdom of Heaven's a good movie. I actually watched over the weekend. It's on Amazon Prime, I think. Untouchable is underrated mob movie. Very underrated. Never seen The Black Kaiser. Mission Impossible is legit. How is that not on here? Shit. I'm going to have to freaking look at this again. I'm going to have to look at it again. All right, everyone. It is 11:52. Black Hawk Down. Oh, God damn it. Black Hawk Down is amazing, but you know it's a better movie? 13 Hours. That's going on my list. We're taking something out. Hold on. We're taking something out for freaking 13 Hours. What the hell are we taking out? Shit. This is hard. This is hard. I think it's going to happen. I think we're taking out Catch Me If You Can and putting 13 Hours there. We're doing it. People are going to hate that. 13 Hours is just, if you haven't watched, The Town's excellent. The Town's excellent, but it ain't better than Heat. You want to watch a freaking epic movie about special forces? 13 Hours is incredible. Incredible. It is better than Black Hawk Down. I'm sorry. I am sorry. I don't want to hear. But the scene and the sound going over the water with the free. No. 13 Hours is incredible. I'm going to have to look at this again. But right now, this is what I'm feeling. It's probably going to change like 5 times before I present it to Tanner. So, anyway, thank you everybody for being here. Love hanging out with everybody. Oh, Black Mass is a great movie. It is a great movie. Great movie. God, great movie. The Warriors did not make it, Heinze. Zero Dark 30 is a great movie, too. All right, everyone. I'm going to go to sleep or attempt to. I will be back tomorrow night. I may stream during the day if I can. I'm not sure. I got a few things I got to do tomorrow. But we'll be back tomorrow night. And I'll talk to everybody later. Have a great night, everybody. I'll catch you tomorrow. Hopefully the markets are green. Over and out.